Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you.
At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper Trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit stocksnipertrading.com.
Recording in progress.
Hey guys, welcome everybody. Good evening. Thank you guys for joining. Welcome to Stock Sniper Trading. My name is Ron. My partner's Dave. Welcome guys. It's 9 p.m. Eastern. This is our live Tokyo sessions we're going to do for this week, and today's date is Monday, May 27th. So thank you guys for joining. I appreciate everyone for joining. Welcome Hussein. Thanks for joining, brother. And everyone else, thank you guys. Young Shika, welcome. Warrior, thank you for joining. Mr. 730, welcome. Vereen and Tony Gold, welcome as always. Thank you guys for joining. I appreciate all of you guys. How is everybody doing? How was everyone's long weekend? Happy Memorial Day to those in the United States. We welcome you guys back. So the markets today, the US banks were closed. Most of you guys know that. So there was a little bit different momentum, different volume today in the markets. Tomorrow, everything will resume back to normal. We'll talk all about that. Tonight's call, guys, what we're going to do is we're going to kind of go through kind of more what we should be doing on the weekend or the start of the week. So it is the start of the week with the holiday. We're going to go through Forex Factory, the entire weeks of news going forward, so we can highlight which days we should focus on. We're going to go through the earnings for the week, highlight which days we should focus, pre-market and after hours. If there's any bigger corporations that we need to keep an eye on, like last week we had Nvidia. Nvidia is almost $1,100 per share trading right now, and I don't know if some of you guys heard, but there's hints that they're going to do a forward stock split for a 10 to 1. So for example, let's just use easy numbers. If it's $1,000 per share, they will reduce it down to $100 per share. They're going to put more outstanding shares on the market for new investors to get into Nvidia. And if you're looking for a solid security for the future, if you're looking to invest 5, 10, 15, 20, 25 years down the road, I for one will be adding to my Nvidia position, and I'm going to be going with a larger position. I did this with Apple in 2008, and I'm still holding that, and I've been part of 3 forward stock splits since 2008 with Apple, so my shares are just multiplying, and Apple hit all-time highs. So Nvidia is allowing everybody to have a chance to get back in if you missed the initial run, and hopefully Nvidia will go back to trading to $500 and maybe back to all-time high $1,100, and you can kind of maybe 10x if we go back to all-time highs, which I think we can do in the next 3 years, 5 years, 10 years, 15-year horizon. For some of you guys that are younger and you guys are looking to maybe put some money away until you're 65 years old and not touch it until retirement, think about this. It's a great time to start. If you're looking to put money in an RRSP, your retired savings account in Canada, or your Roth IRA in Canada, and I'm not sure what else everybody uses in Europe for your retirement, but these are things that you should look at. And if you're looking to put money away and maybe collect in the future of graphics cards, anything to do with computer chips, semiconductors, maybe Nvidia is going to partner up with AI and make the world a better place with technology. So did anybody hear about that? Did anybody listen to the conference call last week of Nvidia? They're kind of why markets are at all-time high. It's not just Nvidia, but they are a big majority and a big player in the market, guys. Is anybody on this call, or is it just me tonight? How is everybody doing? It's very, very, very quiet, guys. Come on, anybody here? Or is it just me? I know there's not a lot of us because it is very late. It's 9 p.m. Eastern. In Europe right now, it's 2, 3 in the morning. Okay, Winston, you're here. Thank you, man. I got you. Welcome. Okay, Vereen, you're here. SMR Graphics, thank you. You're here. Ron Swartz. Amazing name, Ron Swartz. My name is Ron, too. Okay, guys. Let's get started. First thing that we need to do is, if everyone on YouTube can hit the like button, we do appreciate it. Thank you, guys. Yeah, MTMJ Nvidia could definitely be a good up looking forward into the stock split. Yeah, it should be coming. I didn't see the exact date, but I believe it's the first or second week of June. They should be splitting. So forward stock splits are healthy, guys. So that's a good blue chip company that does this. If you've ever heard of a reverse stock split, that's kind of a disaster if companies do that. You guys have probably seen a few pump and dumps in your time that have done a reverse stock split. That kind of dilutes the shareholder and is not a good investment. Okay, but Nvidia is doing a forward stock split. So if you guys want to look up those, what they are after the call, definitely look into that. Some of the biggest companies that we know have done forward stock splits in the past. Amazon just recently did one. Tesla did one. Apple has done many since 2008 that I'm aware of. So yeah, Foon did a 50-to-1. That was not necessarily a blue chip stock, Foon, but yes, it can really hurt the shareholders. So forward stock splits is positive, guys. June 1st week. Okay, perfect. Thank you for that, guys. So it's coming any day now. Let's keep an eye on that. Sometimes the market reacts when they do the stock split. It might drop 5%, 10%. That might give you a better buying opportunity. Sometimes as soon as they split, there's a lot of demand and it might drive the price up, but just take it again day by day, see how it is. You don't got to go all in. You can kind of start to position yourself a little bit. That's what I'm doing. I'm gonna buy full disclosure, I'm going to buy like $10,000 increments. So my first position I'm going to start when they do the stock split will be $10,000, and then to get me initially started. And then if I see a dip, I'm going to add another position. And remember, I'm not trading this. I'm not scalping Nvidia. This is a long-term hold that Ron is going to hold for maybe the next 23 years until I turn 65 years, and then I can start to draw off of it in my retirement. So this is not something that I'm just doing for some quick gains. This is something that I'm putting alongside with my Apple stock, and this is going to be part of my retirement, part of my pension, and hopefully for the kids' future as well, for my kids. So guys, yeah, so that's just a little bit of stock talk on Netflix. Let's get into it. Let's start looking at Forex Factory. How many of you guys have already done your weekend homework or your weekend analysis of the markets? How many of you guys have already looked at what this week has prepared for us? If you guys haven't, no worries, I'll go over it with you guys, but I want to kind of get you guys in the habit of doing this so you guys can start to plan ahead. It should be part of your trading plan when you go into these markets daily, because when you go into these markets on a daily basis and you know what to expect, you're going to make yourself a better trader, as opposed to just guessing why the markets are moving up and down, why there's some consolidation, why there's volatility. It eliminates that, guys. So a little bit of preparation. Again, you don't have to spend 30 minutes like me on this call. You can do this in 5-10 minutes. You know, if you have specific securities that you're looking for, specific days that you're trading on, those are the days that you should be looking at. But so again, Monday today, May 27, if you guys weren't aware of this, maybe you didn't see the news, maybe you were wondering why are the markets trading like this, lack of volume. Well, we had the biggest markets to that trade all of the volume. You can see in UK we had British banks closed all day today. So the European market was really slow. If you were trading, And then we move into the biggest market right here, our North American market, our Wall Street. USD was closed today due to Memorial Day, so that's a long weekend, but things will start to pick up again. Okay, so number one, if you were trading today and you were wondering what was happening in the markets, why was there maybe not so much volume as you're used to? Well, this explains it right here. So ideally, when you see USD and British banks, guys, take the day off. Take the day off. You know, you don't need to force trades. You might make a couple mistakes. Spreads might not be the best. And there could be areas of manipulation when there's not a lot of a lot of volume in the market. So just take the day off, guys. You know, when we see this, SST took the day off over here, and now we're going to pick back up now in the Tokyo sessions moving into London tonight. Okay, so that's already passed. We've had this. Now let's start to move into what to expect later tonight in London. I'm going to start to move into Tuesday. But Forex Factory is a free website, guys. It comes in pretty handy. It does have some news and latest stories over here. UK shop inflation back to normal levels as election draws near. So we might see this as well in North America as we get closer to November for the US elections. We might see that they might bring down the interest rates in order to look good in the elections and things like that. So this is things that we're going to prepare for over the summer months. If you guys know trading, how it trades in the summertime, we're moving into June, July, and August. So there's a different seasonality, different volume, how it trades in the summertime. So just prepare yourself for this. You know, this is more forward forecast for longer picture for maybe the next quarter to what to expect in the summer months. And then there is a lot of things going on here with the yen monthly report on services producer price index. I believe that already came out as I'm speaking. France's Macron renews calls to buy European on Germany visit over here. Canadian dollar extends rebound against holiday weekend greenback. So there's a lot of useful information here, guys, that you can read in here. This will maybe help you with your trading. It's good stuff, guys, to continue learning as opposed to being on Netflix all day. Read, guys. Read the financial markets and see what's going on. Over here to the right, guys, just because we have it going on, I have it on gold. GC is the ticker in the futures market. We're getting all of our data from Rhythmic and the COMEX exchange. We are currently below the VWAP right here, the volume weighted average price. These are in 15-minute time slices. So right here is 8:15, 8:30, 8:45, 9 o'clock. We just started this call, and it should be approaching 9:15. So if you are watching over here, it is on gold. We are currently below the VWAP. This is what's called a heat map. So you can see up here, you see this heat up here at these offers at around 23.55. There's a large order up there. There's big liquidity. Maybe the market will come back and trade into this. Maybe it will keep moving away from it. So there was a first level of support liquidity right here at 23.51 that it just transacted into, and there is some heat down here, some liquidity sitting at 23.50 at these psychological numbers down here. We'll see if gold makes its way down here, maybe picks up these orders, it may reverse, or it may just pull these and continue pushing down. Okay, but I'm not looking at trading right now. We're going to go over the news, and in tonight's call, what we're going to do is we're going to focus on three securities. We're going to do gold, Nasdaq, and US30. We're going to break it down top down, but we're going to do more higher time frame for tonight, 4-hour outlook, so that we can see maybe how we're positioning ourselves this week. Okay. Okay, Varine, tomorrow is consumer confidence at 10 a.m. Yeah, big folder. Yeah, that's what I was just about to talk about. So it's good that you're on it. Okay, guys, so I'm in Tuesday now. Now we're looking into the future. Now we're looking into what to expect moving into London market. You can see, so look if there's anything specific. If you trade the Swiss franc, I'm sure that you want to be aware of this. At 12:55 a.m. Eastern, you've got the SMB chairman Jordan speaking. So if you do trade the Swiss franc, you want to be aware of this medium impact folder. We do have some US FOMC members speaking, Bowman and Mester speaking at 1 a.m. Eastern. So you got some US speakers here from FOMC. We move into over here, Bank of Japan core CPI year over year coming in at 1 a.m. And then we move into 2 a.m. There's not much going on. So London starts at 3 a.m. Eastern. We don't have too much. More of the news starts to come in right after Wall Street. So remember, guys, tomorrow morning 9:30 banks are back trading as usual. We're going to get that volume coming in the market. Remember, it was after a long weekend, so you might get that injection of some nice volume to trade at Wall Street. It may be volatile, so this is where you got to know now. You got to think about your risk. How much are you going to risk if you're going to trade Wall Street? Know that we're coming off of a long weekend. The banks were closed and now they're opening up, so it might be a little bit choppy to get started, but try and take your time to see if you have to sit back and wait for candles to close to see what the direction is. You got to prepare for this mentally right now, so that you're ready for it tomorrow. And then at 10 a.m. we have this big red folder coming out of the US. It's our CB Consumer Confidence Report. Okay, so if you don't know what this is, really quickly open this folder and it will give you some quick detail about it. So it comes from the source, the conference board. What does it measure? Level of composite index based on surveyed households. Actual greater than forecast is good for the US currency. It's released monthly. Why do traders or investors care? Because financial confidence is a leading indicator of consumer spending. So you and I, we're consumers. If we're confident with the economy, if we're confident that the way how it's moving, then maybe you and I might spend our money because we're confident with everything. But if consumers are not confident with the economy, then they might get a little bit conservative with their spending and they're not spending as much, and that will impact directly in the market. So this is what we want to see tomorrow. Even if you're on the sidelines and you're just looking to see what is released, that might shape up how the markets might trade the rest of the afternoon, maybe going into Wednesday and maybe the rest of the week. So this is a big folder and it accounts for a majority of overall economic activity. So where do they get this from? It's a survey of about 3,000 households which asked respondents to rate the relative level of current and future economic conditions, including labor availability. So is the labor force, is there jobs available for individuals to work, or there's not a lot of jobs and there's more layoffs? Business conditions and overall economic situation. Okay, and then we can see the history, the past results. So you can see April 30th was the last forecast of the consumer, and look at it, it came red. So we were forecasting 104 and it actually came out red 97. So it wasn't, consumers were not confident at the end of April. We're going to see now what they say tomorrow, and then the next release will be June 25th. Okay, so now let's just look quick at the numbers. So previous was 97%, that red number that I just showed you, and they're forecasting a little bit of a decrease in the consumer confidence, not by a lot, by 1 point, but we'll see what the actual number is. If it comes in 90, then you're about 6 points below the forecast and 7 below the previous. That's not looking good. Like, consumers then are very cautious and they're not 100% confident with the economy, and you can see month over month that it's not looking good. However, if this comes out, let's say 100%, then that's good. It will come out green. We're 4 points above the forecast. Consumers might be getting more confident in the market that maybe we're going to get some interest rate cuts, and then maybe the economy might start to recover. Okay, and then we have FOMC members speaking throughout the day. 1 in the afternoon, 1:05. FOMC member Cook speaking and Daly speaking over here, and then we move into our Australia, New Zealand, Tokyo session at the end of the day. So just talking over here on gold. So you see how gold allowed maybe the shorts to cover their short position in this deep liquidity, this depth of market down here. We were talking about this last week in our calls. So it allowed the shorts to cover their position, and then look at the buyers asking to buy gold right back up, and it came right back to trade up at our VWAP. So it just dipped down, allowed the shorts to cover, and we got some demand up here continuing to ask for gold. We'll see if the buyers of gold can maybe trade and transact above the VWAP and take out some of these offers, and maybe we'll see if it can bounce back and maybe trade into this liquidity sitting up here around 23.55, 56 area. Okay, so do you guys understand what just happened right there? Like, do you guys want me to repeat or let me know. Like, do you guys understand what a short covering is? Where shorts cover their position in order to profit from the market? Because what we can do in the markets is we can buy low, sell high to make a profit. And what we can do is selling the market, we can sell high and buy our position back low in order to make profit. So Winston, explain again. Yeah, no problem. Okay, so if we have short sellers shorting the market, like for example, if you're hitting the sell button, you are shorting the market, you're selling the market, you're selling gold. In order for you, if it comes down, let's say it drops 20 pips, 30 pips, for example, and then for you to now make profit, you have to close that position. In order to close your position from a sell, you have to shake hands and buy back. So you got to find a buyer. So you have to find where the buyers are and the market. That's why we use a heat map to tell us where that big liquidity is in the market, because that's where it's got a high probability it wants to go and trade in there. So right here, just to show you this example, the sellers sold the market down into here where that deep level of liquidity is. You can see it right here, and it allowed the shorts to cover their position to get out of their sell, and hopefully they made a little bit of profit on that transaction. And then the buyers again bought the dip, they bought the low, buy the low, and coming right back up. But you can see that right away when it sold down here, the buyers were asking to trade up here. So it is bullish when they're asking to trade higher than what the lowest bid was down here. So now we just traded right back up to here. There was a lot of resistance up here and pushing it right back down. Now we're transacting again right near the VWAP. This is kind of like where the price kind of consolidates at this area, and it's kind of like a fair price. But when we dip down here, it might be a discount buy, and when we're up here, it might be a premium sell. Okay, so but we'll Winston, I've got a lot of webinars coming forward to start to explain these things in more detail, but I just wanted to show you right now as it happened live so you guys know what happens. Okay, so that's a short covering. It could be like a stop loss raid where they come down and take out all the stops and clear the board, and then allows for new money to come into the markets. Okay, so just continue moving forward. So Tuesday, tomorrow morning, guys, we don't have much in Europe. This one, maybe highlight this, or maybe make yourself aware that 9:30 a.m. is Wall Street. 30 minutes later, we have 10 a.m. Consumer Confidence Report. Okay, so it's a red folder. It means high impact. So take your time with this. If you're not in a trade, maybe stay on the sideline, see what happens. There could be volatility here. If you are in a trade going into this, you have to expect a little bit of volatility. So this is where then you do not over leverage. You don't risk too much. You're not in too many trades. Again, guys, let's stop trading reckless and start trading more as a professional, and understand, guys, we're not gambling in these markets anymore. We're trading these markets as if this is our business. Okay, I need you guys to get into that mindset, to get into the business of trading, that you're a businessman now or a businesswoman, and you're not in the casinos anymore to gamble. Now it's time to start to learn that trading is not just, we're not just trading for tomorrow to get rich. We're trading for long-term wealth that might take 3 years, 5 years, 10 years, 20 years down the road, and then you can start to reap the benefits from the markets, okay? And maybe have an ongoing stream of revenue through these markets, but doing it appropriately, guys, with proper risk management. Okay, so that's my job here, is to continue to stress that with you guys and make sure you guys understand that, because I know we've got a lot of gamblers here, but you're on the wrong channel if you're gambling. Okay, if you guys want to gamble, we'll go to Vegas together, we'll go to Niagara Falls, we'll play blackjack, we'll play baccarat, we'll play poker together. That's where we'll gamble. But when we're in the markets here, guys, we're going to trade more as professionals. Okay, so take your trading a little bit more serious, and then you might start to see your profit loss reports coming in when you're having multiple days of consistent profits, and you're eliminating a lot of those losing days. So a lot of you guys are, and I want to applaud you guys. So some of you guys are really taking your trading serious now, and you've gone through that tough times, but now some of you guys are doing really well. So I want everybody on the call to get there. Okay, so Wednesday, midweek, it's already here because we had the Monday holiday. So Wednesday, what do we have? again, there is a little bit of all-day news coming out of Europe, so make sure you're aware of this if you're going to trade the London market. You got German prelim CPI month over month, red folder. So if you're trading DAX, the German exchange, if you're trading the euro, if you're trading the pound, anything in Europe on Wednesday, careful in here when you're trading. 4 a.m. we got some news coming out as well. Then we move into Wall Street, 10 a.m. Again, you're right here, Richmond Manufacturing Index coming out. It's a orange folder, medium impact. And then we got these books coming out. So the beige book over here, 2 p.m. Eastern, Wednesday afternoon. If you don't know what it is, if this is your first time hearing about this, just click on the folder, and it comes out of the source from Federal Reserve. So make sure we understand what the Fed Reserve is. More hawkish than expected is good for the US dollar. It's 8 times per year when they release this, 2 weeks before each FOMC meeting. So this beige book is being released only 8 times per year. That's why it's significant. We only see this beige book 8 times per year, and it's always released 2 weeks before our next FOMC meeting. So this is a really, really important FOMC meeting. This is the one in June where they've been hinting that maybe this is going to be the start of a rate cut. I don't see it this in June. That's just me. That's my opinion. I still don't see it. I think they're going to pause the markets. They're going to say something that the labor force is still strong. We're creating jobs, unemployment, CPI, all of these things, yada, yada, yada. And they're going to maybe continue to pause and then say we're going to continue to review it. That's just my opinion. I will be really surprised if I see a decrease here. Let alone an increase. So what is this? This analysis is used by the FOMC to help make their next decision on interest rates. However, it tends to produce a mild impact as the FOMC also receives 2 non-public books, the Green Book and the Blue Book, which are widely believed to be more influential to their rate decision. Okay. FOMC is a really, really big event, and it's coming out in the next 2 weeks, okay? And that will be at 2 p.m. Eastern. And then we got some speakers again. Then we move into the Sydney, Tokyo's session over here. So you can see that there's not too much big folders so far. Let's go into Thursday. Thursday gets a little bit more busier. You can see that it really opens up. It gets busy starting always in Europe over here. So Swiss has their news coming out. Italian monthly unemployment rates come out. We've got our European unemployment rates, our Italian 10-year bond auction. We'll see these all through London on Thursday. And then we move into 8:30. So as you guys know, there's one folder that comes out every single Thursday in the US, and that's our unemployment claims. But we do have more folders. So we have at 8:30 a.m. Thursday, make a note of this. We have our USD preliminary GDP quarter over quarter. So we can see a decrease. Previous was 1.6. They're forecasting a little bit of a decrease to 1.3%. So this is our GDP quarter over quarter, gross domestic product. We don't want to see this low. We want to see North America, or specifically US, having a positive GDP. But slowly we've been seeing a shrinking GDP, so that kind of hurts the economy when you have a shrinking GDP. That's not good. So we'll see what the actual number is here Thursday morning. And then also back-to-back folders, you got your weekly unemployment claims that come out every single week, every Thursday morning at 8:30. So I can see right now last week's numbers came out 215,000. If you want to know where this number came from, click on the folder and you can see right here. I can see last week was May 23. Previous to that was 223,000. They forecasted a little bit of a decrease to 220,000. Remember, the lower the number, the better. The less we have individuals unemployed, the better it is for the economy. That's why this number was lower, 5,000 below their forecast, and it's green. A lot of people get confused with, why is the number smaller? Shouldn't it be red? But you got to understand what we're looking for. What is it measuring? So this is measuring unemployment claims. So that's good that we have smaller number here. Less individuals applying for unemployment means the economy is doing good this week and more people are working. So there's that 215,000, and then that's why when it moves into this week, our previous number is that green 215,000. Look at what they're forecasting this week. 3,000 200,000 more individuals applying for unemployment. So maybe something happened last week. We'll see the actual number. Again, if this comes out 220, it's going to be a red number. It will be more. More people are applying for unemployment. Then that will directly impact the US dollar and impact everything else that you and I are trading, whether it's the markets, whether you're trading S&P, NASDAQ, or Dow Jones, whether you're trading gold, silver, or crude oil, or you're trading the pound or the euro or the yen. Anything you're trading will be directly impacted because this is directly correlated with the US dollar. Okay, so Thursday, busy day. We also have prelim GDP price index quarter over quarter, a orange folder, lots going on. Then we get into Wall Street and 10 a.m. again, red folder, pending home sales. We saw last week new home sales were down, probably due to the high interest rates, and you maybe have to have bigger down payment. You can't get away with the 5% down now. Now banks are getting a little bit more stringent, very tight with loans. So you might have to have now 20% down as a down payment in order to apply for a mortgage. That's how it is in Canada. It used to be years ago 5% down, where they were really lenient. They were lending money at a low interest rate, and that kind of caused the Canadian housing bubble, and it still hasn't popped yet. So we'll see what pending home sales are over here. Okay, and then we got some natural gas storage, crude oil inventories. If you do trade crude oil, make sure you are aware, 11 a.m. on Thursday, we have the crude oil inventories coming out. So this directly affects our supply and demand of crude oil. Okay. And then we move into, again, our Tokyo Asian session over here that we'll be trading together. We'll watch some of these folders. And then to wrap it up, Friday, May 31st. So make sure, guys, the markets are engineered, okay, on a higher time frame. So this on Friday, not only is it Friday, you guys know how Fridays do tend to trade. And it's also the end of the week and also the end of the month. Okay, so pay attention to the higher time frames on this day. Watch how they close, and then watch how June opens on Monday. Okay, so everything happens for a reason. This Friday happens to be the end of the month. So again, maybe take your time when you are trading. Don't over leverage. Don't go into a weekend with a big position because you don't know how the new monthly setup will open. Cash eBanks muted. You can't hear me, guys. Can you hear me, or are you guys having any problems with the audio? Zoom, YouTube, can you guys hear me? Yeah. Okay, Cash, I think it's maybe on your end because everyone else can hear me here. Have a look at that. Yes, thank you, Travis. And if you guys can hit the like button, guys, I do appreciate it. We have 100 viewers. I know there's not a lot of us on this call, so every like helps, guys. We do appreciate it. You know, our whole objective is to try and reach traders around the world, and that's how we found you guys. So by others hitting the like button. So we do appreciate it. So thank you, guys. Now Friday. Okay, so we have a lot of low impact yellow folders throughout pre-London and London. A lot of stuff going on. And then we move into our 8:30 news. We have a USD and Canadian folder. So in Canada, we have our GDP month over month, and then we have our US core PCE price index right over here. Okay, and then that will be Friday. Okay, so just an overall summary of this week's news according to Forex Factory. We have consumer confidence report, red folder, unemployment claims this Thursday. It's not that big of a week. You know, sometimes we see some big red folders every day. So this is more of a lighter week. More importantly, let's see how they close the monthly this week. And then we can prepare for the month of June, what's to come. Okay, so that's Forex Factory, guys. You know, I took a little bit longer than expected because I do go through each individual kind of folders, the high impact ones with you guys. But you can do this on your own. It doesn't need to take you that long. You can do this in 5-10 minutes. You know, it's just but always prepare yourself, guys, so you know what's to come. Now Now, after I do my Forex Factory analysis, I know the bigger fundamental news and the economic folders. Now what I want to move into is earnings. Is there any specific corporations that are reporting this week that may impact directly the securities that I trade or the markets overall? So you saw last week Nvidia was a big one, and that kind of moved the market to all-time highs. So is there any other big corporations this week that are like our top 10, you know, our magnificent 7, our big guys, Amazon, Microsoft, the big corporations? Or is there anything in specific in general that you trade? I trade US30 from more often than not, so I like to see if anything in healthcare is reporting, any big banks are reporting, any big box retail stores are reporting, and then I make note of those days. And earnings can be pre-market and also after hours. Okay, so today everything was closed. That's why we had only one corporation. What I like to do to start my week is I click on the calendar and I start seeing Monday, Tuesday, Wednesday, Thursday, Friday this week, and then you can get a good look at it. So you can see today there was nothing before open, only one after close, very light day. Obviously all the banks were closed, no reporting. Now tomorrow things will start to pick up. So tomorrow, Tuesday morning, we got 16 before open, 9 after close. Wednesday we got 14 pre-market, 20 after hours. Thursday a little bit busier, we got 26 pre-market, 23 after hours. And then Friday it's a very light day in the market. We only have 2 corporations reporting pre-market and 0 after close, and then it's month end. So let's take a look at Tuesday. Who do we have reporting pre-market? Bank of Nova Scotia. Okay, so I'm telling you guys myself, I do own shares in Bank of Nova Scotia in Canada. I also have TD. I get a dividend out of these. I'd like to see exactly what the report is tomorrow at 7:45 a.m. Growth is not looking good here, negative 50%. Why are Canadian banks projecting this? Let's take a look. I can see their earnings per share is $1.14. Their revenue is $6.1 billion over here. I'll see the actual numbers tomorrow, report pre-market, and who knows? We'll see. Maybe it might allow an opportunity to add a position. You can buy calls if you're going long on these securities. You can buy puts if you're shorting them. That's trading in the options. So we can trade options on each one of these individual securities over here on the option chain that we can look at. So that's another thing, guys. We have a new program coming forward. It's going to introduce the stock and options education as well as investments. So you can do a lot of things, guys. You can be multitasking in the markets. You can trade Forex, you can trade the stock market, you can trade the options market, you can trade the futures market, you can trade the crypto market. There's a lot of things you can do. Just define what's best, what you enjoy, and what is good for learning. Look at gold, guys. So you know when I was talking about that short covering, they covered their short position and then the buyers were asking, and now you can see we're approaching that level of liquidity right up here, that 23, 55, 56 area. So the buyers might transact right in there, and then there might be some transactions happening up there, might be exchange. Buyers could be taking out some profit and closing transactions up there. It might create more demand up there, and maybe gold will continue to push through here. It could maybe encounter some supply, some resistance up there, and maybe pull back down. But every time it pushes down, you see the red sellers, they're pushing it down, but they can't find anyone to transact down here. Again, they pushed it down. They're getting stuck down there. There's no one that wants to transact down there. The buyers keep asking, so forcing a little bit of a short squeeze and they're asking to trade up here, and that's why it's bullish right now on gold. So when you look at this entire scenario at 9:15, the shorts covered their position down there. Maybe they hit some pending orders, some stop losses, cleared the liquidity down there, picked up that liquidity, and now you see it's being bullish right now, and we traded right into that pocket of liquidity. So this is how a depth of market can really help you guys out when you're looking at also just your traditional candlesticks on a regular chart. This depth of market can also allow you to see how deep the market is, where the heat is, where that big levels of liquidity are, and you can see how it kind of transacted in there, took out that liquidity, and then bounced right back to the next area of liquidity. The market wants to find where the bigger volume is. It wants to find those liquidity. That's where the bigger transactions happen. So right now, it's visually, you can see how clear that happened. And we were trading down here, cumulative volume delta, where it kind of dipped down to negative 200 down here, and now we're above balance. We're now positive cumulative volume delta of 120. So you can kind of see that was kind of like a reversal from a bearish market to a bullish move right now. Now you look at the depth of market, how it builds above the VWAP in case it comes back, transacts in here. Maybe you have the depth of market below developing, and buyers will buy those pullbacks and then continue to maybe take it to new highs. Okay, and okay, so guys, as I see things, I tend to flip flop. But going back to over here on the left side of our chart, our earnings for Tuesday morning, Bank of Nova Scotia. Some of you guys, this is not relevant for you guys. Maybe some of you guys do not even trade the Toronto Stock Exchange or any Canadian banks. That's all good. Then let's look at other corporations in here. We got Hello Group over here, Futu Holdings, and there's some names you probably maybe never even heard of. There's some names I've never heard of. That doesn't mean that, oh my God, it's the end of the world. That's just, there's too many things to focus on. Start looking for the quality securities and pay attention to those. Okay, so Tuesday morning, not much going on pre-market. Let's see after hours. Over here we got the Cava Group over here, Digital Turbine, Heiko Corporation, Box Inc. Again, so that's after hours. No big names, maybe just Cava Group over here. And then we move into Wednesday morning. Okay, Abercrombie and Fitch. Some of you guys wear this clothing. Again, retail clother. Maybe we see retail spending. How are they doing? See this if you wear the clothes, you can actually trade the company through calls and puts. If you want to buy, if you want to sell, like here, Dick's Sporting Goods. Some of you guys have shopped over here. You guys have bought your sporting goods over here, but you can trade this company, Dick's Sporting Goods in the U.S. Advanced Auto Parts. Some of you guys maybe shop here, and you guys are buying your automobile parts. Me, Bank of Montreal. I'm in Canada. This is what I'll be looking at. Earnings $2 per share. Revenue 5.8 billion. Again, the growth not looking good. Why is that? Why are they maybe projecting not a good growth in the future for Canadian banks? Because banks are suffering right now. We've seen regional banks, smaller regional banks in the U.S. Have difficulty and close. So we're going to start to see maybe the dominoes are going to start falling apart soon with all of these loans coming up for renewal. A lot of mortgages in Canada, 2025-26 will be coming up for renewal when they were giving right before COVID in 2020 those 5-year mortgages at less than 1.5%. Now they're coming up for renewal and at higher interest rates. So how will that affect payments and things like that? These things I do follow. I'm fascinated by what goes on in the banking sector and loans and things like that. So it directly impacts everything in the markets, guys. So big banks, I focus on that. That's why I do trade US30 Dow Jones in the US. Okay, so this is all on Wednesday before the open, after hours. Wednesday. Salesforce, CRM, I do trade US30 Dow Jones. This is one of the securities that consists in Dow Jones. So I'm going to highlight this and I'm going to be aware of this Wednesday after the close at 4 p.m. Right when Wall Street closes, 4 p.m., Salesforce releases their earnings. $2.38 earnings per share, 9.14 billion revenue quarter over quarter. It's seeing a growth of almost 11%. I'll see the actual numbers. Maybe I'll listen to the conference call. I'll listen to the forward guidance of this, and this could dictate maybe how Dow Jones moves a little bit over here. Anything to do with AI, guys. Here's an AI 405. Probably they're going to have some good results, some good numbers, some good growth with the emergence of AI. You can trade this corporation directly if you want or watch it on the charts. So this will be HP. We got Hewlett Packard over here. American Eagle Outfitters, again, retail. Okay, so the big one I'm going to be concerned about on Wednesday after hours is Salesforce, CRM. So I make mental note of that and be prepared for that. Thursday morning, guys. Okay, so Ron smokes weed. It's not a secret. This company, Canopy Growth Corporation, I was first invested in this company. Some of you guys, if you understand your cannabis back in the day, before Canada even legalized, this is when we were doing our research, and Canopy Growth, before it merged, this was called Bedroken, this company, and it was trading for 25 cents, and then they kind of merged with Tweed, which is Snoop Dogg's was affiliated with that. Then it started to go up a couple dollars in value. Then they kind of merged with Canopy Growth, and it went up to $9. And then Constellation Brands, one of the big ones that makes those Corona beers, those cervezas, they kind of invested $4.1 billion into Canopy Growth, and that kind of led into the legalization of Canada. And guys, a 25-cent stock went up to $75. Okay, let me repeat that. 25 cents went up to $75 just by following the cannabis industry, leading into legalization. What is happening in the US? Biden is now reclassifying all of the scheduling for marijuana being federally legal in the US. If you are interested in this sector, start to follow these specific companies: Canopy Growth, Aurora, just to name a few, Tilray Brands. These things now are probably going to go through what Canada went through, now leading into elections. Might be part of their platform to legalize marijuana in the US. So Canopy Growth, they have their earnings, they got their revenue, not looking good because the government kind of destroyed this industry with all of their taxes and things like that. So here in Canada, not really good. Again, this wasn't a lifelong investment for me. This was get in and out, make my money, and continue. I trade these securities. I flip them with news. I pay attention to news. I follow cannabis. I smoke cannabis. So this is something that interests me on a daily basis. So if you guys have any questions about the cannabis industry, I can help you guys out with this. I know a little bit about it. Foot Locker. Okay, so they are reporting 6:45 a.m. Thursday morning. Foot Locker, a lot of us, where I bought this Jordan shirt, I bought it at Foot Locker. How is the spending? What are consumers doing? Am I going to Foot Locker to buy my clothing, or is it tight right now? Jordan clothing is expensive. Ron doesn't have too much money right now. Am I not spending? So we're going to see growth at Foot Locker. Some Foot Lockers are closing in the U.S., guys, at the malls. They're closing down. Dollar General. This one right here, they've been closing stores in the U.S. So we will see. If you pick up on why they're closing, maybe you can look to maybe initiate a put or a short position if these things are closing. Why? Because Dollar General they claim to sell everything for $1. With inflation, if they want to keep it at $1, they're going to lose money. So that's why they're forced to sell things at $3, $4, $5, and they're not a dollar store anymore. Now they're like Walmart. So that's maybe doesn't sit well with consumers. Maybe when I go to the Dollar General, I want to buy things that are $1. I don't want to go in there and start spending $5 for a chocolate bar. I want to spend $1 or $2 for $1. That's what they claim. That's what their name is. But inflation might change those things. Raw supplies coming from China are expensive. It's an import-export business, not cheap. So this, do you guys know what I mean? Start to look into the markets, start to get more specific. I just told you about cannabis. I told you about Foot Locker. I just told you about Dollar General, Kohl's Corporation, Best Buy. In Canada, Best Buys might be closing down, guys. In US, might be closing down. Electronic retailers are not maybe doing good right now. So all of these things, guys, you can short these big companies through options. You can go long on these corporations with calls, and then you don't have to have so much capital like as you're just buying shares of the company, because now you're buying options. It's kind of like a coupon. It's a bundle of 100 shares, and then you got to kind of predict not only the price, will the price go up, that's a call, or the price will go down, that's a put. You implied volatility, how fast will it go up? The faster it goes up and you're in a call option, your premium will go up 10, 20, 30, over 100%. if you nail it, like with the time decay and all of these things. That's what we're going to explain more in the option program. Those are the Greeks of trade in mathematics, not the Greeks in Europe, but the Greeks in mathematics. That's your alpha, beta, theta, gamma, rho, those things. So those will explain how they work in options, okay? But shout outs to our Greeks in Europe, Tikanis. I'm coming to Europe in 4 weeks. I'll be there for 6 weeks in beautiful southern Albania and maybe 30 minutes away from the Greek islands. So I will be there soon, and I'm getting excited about that. Okay, Royal Bank of Canada. Again, I follow the big banks of Canada, the big 5 banks: CIBC, TD Bank, Royal Bank, Bank of Montreal, and Nova Scotia. Those are big 5s here in Canada. Here's the one I was just mentioning, CIBC, Canadian Imperial Bank of Commerce over here. So this week for me in Canada, bank earnings, and I will be paying attention to all of that because I do trade banks in Canada and I am invested in some of them. Okay, so I want to see the results so that I can make some decisions going forward for the next quarter. Okay, Thursday after hours. I'm sure a lot of you guys have heard of this corporation, okay? Maybe the first 2. Now, this is a big one. Costco, okay? Costco Wholesale. Do you guys have Costco in Europe, or is it just here in North America? Costco is a big box retailer. Most people do their shopping in there. It's kind of like one-stop shop. You get everything here. Costco is a market mover in itself. This trades in the Dow Jones, so I will be dialed in to see what is happening with Costco. If I want to look at the option chain right now, I could look to buy or sell the weekly contracts on the Fridays that are expiring. So today is Tuesday. I can look at the option chain to see how much it is. Number one, let's talk right here with Costco. Do you guys think Costco is going to have positive earnings or negative earnings? Do you guys predict that Costco's share price is going to go up into earnings or will go down into earnings? Because we need to predict the direction, number one. So if you think you're bullish on Costco, their earnings right here are showing $3.70 per share and $58 billion of revenue quarter over quarter, showing an 8.1% growth rate over here. So maybe, Dan, Costco has a new CEO, something to watch. Perfect. Yeah, so they got a new CEO. See how you pick up on some things? Some people don't know about that. So that's good that, that. Now, do some research on who the CEO is and things like that. Anything to give you like some kind of edge or some insider information that me and you as retailers, we can learn about or read about and help us make some good decisions in the markets that can hopefully maybe give us a good positive return on our money. So if you're looking for thinking that Costco is going to have maybe positive results, maybe you look at the call options, see how much they are. You got to predict the price, and then if it goes up quickly during earnings, then your premium will go up 10, 20, 30, 50%, and that's what you can make. However, if it goes down, then maybe you should be looking to maybe purchase a put to short the market, things like that. But these are all, we will break these things down in our program to come. But Costco Wholesale, Thursday after hours, big one. Dell Technologies, anything to do with tech, computers, AI over here, Dell. Some of you guys have your computers are Dell. We saw Hewlett Packard was earlier this week. So they will be reporting. We've got some computers, tech, anything to do with that. We got Scalar over here, Marvel Technology Group, and just going through the list here. But the big ones are at the top, Thursday after hours. So pay attention, guys, whether you're trading or not. Pay attention to what Costco, because this might move the markets going into Friday, okay? And then Friday, again, we don't have too much pre-market, just the 2, and then nothing in the after hours, okay? So we've talked over Forex Factory, we've talked over our news, we've talked about our earnings. You know, guys, now what specific days to focus on, what securities to focus on. Let's just move into quickly our Discord signal channel. We didn't send too much out today because we took a little bit of a day off for Memorial Day, but I'm just recapping this one that was sent out earlier on gold, how these are sent out. So we're looking for price to take out this level of liquidity, which I kind of showed you on Bookmap. Maybe shorts covered their position down here, and then buyers of gold were asking to trade back up here. And then we were looking for a pullback in this area, 23.37 to 23.39, looking for buys. Again, pullback, you can use this area as a static level for multiple hours or days, because now this builds into becoming a zone. Like you can see on Bookmap, you see the zone now. See all this heat developing now at 2348 down here. See how stronger it's getting. So that's building a zone down there. And then we'll determine whether it's going to be demand if the market ever comes back down to trade down here. So this is developing just like this area developed and became a static zone. And then you had here 9 a.m. where this 15-minute candle came down, rejected out of here, and then have nice big full body bullish 15-minute candles moving for approximately 100 pips, respecting this area 23.37.39 area. So that was just how trade signals are sent out. We also send out trade management. If it goes into profit, we remind you guys, maybe go to a break even, maybe have a trailing stop loss. Those little things, you know, the little things that a lot of traders don't do, we try and remind you to always be mindful of risk management. Okay, and thank you guys to all the viewers on YouTube. If you guys can hit the like and also subscribe to this free Telegram channel, it's pinned at the top of the channel. I pinned it for you guys. This is like our live links to our YouTube sessions. We're going to run the SST kill shot tonight, 2 a.m. to 5 a.m. or sorry, 6 a.m. on YouTube to show you guys how our EA works, our expert advisor. Here's the link if you guys are interested in downloading the free demo. It's right over here on MQL5. It'll take you over here. This is the SST kill shot expert advisor. You can download a free demo and test it out with some set files. It does take a little bit of work to understand how this works, and there's also a Telegram group that helps you with the developer in there as well. So that's the SST kill shot. It will be streaming live later tonight to show you. This is a couple, you know, those gold trades I was just talking about, that 23.37, that 23.38 area, buy with 2.5 standard lots and holding up until that block of 23.50. So taking it all the way up there for basically 140 pips. And you can see that past phase one done with 2 gold buys that were sent out last week, holding into that liquidity. So 3,200 and 3,400, not bad trading day. That'll net you your 8% in order to pass challenges. Or if you're trading live, that's not bad money to be made in the market. So guys, we do take the trades that are sent out in the signals as long as they reach the levels and we got retest confirmations, if there's a rejection wicks and things like that. So we do take the trades ourselves as long as everything lines up and there's no impulse and volume closing and this and that and all of those things that we do talk about. Guys, let's just read this quote real quick together. Sometimes you've got to temporarily cut off all of the partying, eating out, and excessive spending to get your money right. You're not missing out on anything when you're building a better future for yourself. Keep stacking and stay low key. Your future self will thank you guys. I appreciate you guys putting in the work, grinding, putting in those late nights. You know, some of you guys are not going out anymore on the weekends. You guys are really focused on the markets. You're continuing to do your journaling, your charting, and I salute you and I support you with that. I'll be doing that with you guys too. I'll be coming on here on late night sessions, working with you guys, everybody on Zoom and YouTube, you know, to show you guys we put in the work as well. So should you guys. Take a little bit of time out of your day, and maybe your future self may thank you later on down the word. Down the line. It's not easy. Okay, I'm going to be the first one to tell you guys it's not easy. Trading, investing is not easy. Some people make it look easy. Some people show you the lifestyle and shit like that, but it's a lot of hard work. Okay, it's a lot of hard work. You're constantly battling yourself, your mindset every single day. You're battling yourself if you're in drawdown. You're battling yourself if you're losing money. Trading is not guaranteed paycheck. You know, it comes with hard work. So I just want to keep you guys, you know, straight and keep you guys focused. If you guys are doing really well, stay focused. Don't stay humble, you know, stay hungry, but be humble, and let's go after more, but do it in a humble way. Don't blow your accounts if you guys are doing good. If you had your first profitable week, don't go crazy this week. Continue to do what got you there and build slowly, guys. That's the name of the game. It's a long game. Trading is long. It's not just for a couple months. It's where you're going to be in the next 5 years, 10 years, 20, 30 years down the road. And then that's when you're going to start to reap the benefits of passive income and start to really utilize these markets to your advantage, guys. So if you guys are relate to this, 100%, guys. We're behind you. We're behind you guys, okay? Just continue staying focused. That's all I ask from a lot of you guys. This is our weekly schedule, guys, on this free Telegram channel. So you can see we're going to start off the Londons later tonight. We do have our Wall Streets with Dave tomorrow starting. This is me in this Tokyo session coming in with you guys. So you can see we took the Memorial Day off. And Zoom, guys, we have a weekly webinar on Wednesday, okay? Should be a good one. Join us if you can at 6 p.m. Eastern, and then after that we'll come back in the Tokyo markets. And then just going forward, guys, we show before and afters of our trade signals over here. So to give you guys, there's the gold setup. And everything we do and offer in here, there's promos, there's giveaways. I can't scroll through everything, but this is what this is here for. It's for you guys. So that's that free Telegram. It's linked to the top of the YouTube. So let's now go into the charts. Let's get started with gold. Okay, so what we're going to do is a top-down analysis. I'm not going to go down to like the 5 minutes tonight. We're going to focus on the higher time frames to see maybe where our weekly move will be. And then we're going to do 3 securities. We're going to start off with gold. We'll do NASDAQ, and we're also going to do US30. And then after that, maybe we'll call it a night. It will be maybe just after 11 o'clock. And then we'll get ready for London and New York tomorrow, okay? So guys, how many of you guys are trading gold right now? Are any of you guys in any active position? Are you guys in a buy, in a sell, or are you guys just looking at the markets right now? Just looking around. Me too. I'm just shopping around. I'm just window shopping right now. I'm just looking what's going on in the markets, seeing some key levels. Maybe prepare myself to what's to come this week. But let's take a look. Let's start on the daily of gold. Okay, so we're going to go to the higher time frame now and start to see what's developing. Okay, so you guys know. Okay, I don't need to go over this. When we hit 2,000, gold broke that all-time high, got rejected. You see it's building strong base, higher lows. We had this nice bullish break that created that new all-time high over here early March, pulled back, holding 2150 support level. I can draw like a green box going across into the future, but I'll do it right now, like right here. So you can see the pullback, how it came right into there, into that green zone. It didn't really break. The sellers didn't have any momentum to break this level. It was held. There's rejection wick, rejection wick, rejection wick, rejection wick, a green body close above, and then continue to move through here. So just this zone right here, that pivot that you see in the market, that point of interest, stretch it across. Okay, will gold ever come back down here? I don't know, but if it ever does, I want to be prepared and have my heat map in there. Like that's like kind of here where that big heat showed up on Bookmap. It's there. It's present. The liquidity is there. Will the market come down and trade into this? I don't know. But it's there. It's showing us. So I'm kind of showing you that there is some liquidity going into the future of gold if it ever does come back down there. But before it reaches this level, right over here, there was another pivoting point over here. You can see when the market broke that all-time high right there, it retraced all the way back down, and then you see it stopped there. You can visually see that it stopped right in this zone right here. So that is my next green box going across the chart. This one might be more active. It's not too far away. This one is maybe resting down in here into the future. So you see we came down, it held, and then we came up again, the next leg up. We created that day right there, May 20th, we created gold's new all-time high of 2,450 an ounce, just shy of 2,500. So what I do now is kind of look at maybe this previous all-time high, that wick, and kind of those bodies to create now my supply box going into the future. Now that box above, I'm going to make it red. Okay, and then I can highlight the all-time high right there. I can see 2450. The all-time high was an impulse break, and then it got rejected, and then we started this bearish move coming down. Okay, this was just recent. This was last week, Wednesday and Thursday. Gold really sold off. We found the bottom on Friday and then started to move up Monday, and we're seeing right now today, are we going to take out yesterday's high of 23.58, maybe continue filling up to 23.78, the top of this body, where it opened on Thursday, or we're trading into 50% of the volume of Thursday. There's the open, there's close, half of it is right there. We're trading right into it, the heart of 50%. Will it push right back down, maybe create a double bottom here, maybe a higher low at this 50% of this green candle? So I'm just starting to, look at levels on the daily where things can go. But first, before I get to all those levels, I just want to continue to look for bigger zones. Now I can see when we traded into that all-time high supply, really rejected the move, and right there's a pivot. The market is showing us gold pivoted right there, and it's 50% of this bullish candle on Thursday, May 9. So what do you think I'm going to do? I'm going to look at the left of the chart right here where it was red resistance, and then you see 50%, that resistance, wick, 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 wick. Market went down, higher low, came up with a big bullish daily candle closing. There's 50%. Now, flip it green. The volume has now closed above the zone. Flip it green, and how many of you guys did this? You could have caught the bottom of gold if you guys did this. Okay? How many of you guys did this? If you did it, honestly, good work. Okay? This is what kind of I talk about every single day. To figure out these big body candles that initiate a move, look at directly half of it, look at maybe some structure to the left of it, and then there's your zone. And it naturally came right down into there and kind of pivoting out of here. Okay, it may come back down into here, and we'll see, will this box hold in here? Will it break and take out a low and grab the liquidity and come back and close above? Will it close red below, and then we're going to push down to this block down here? So this one might be more active this week. Okay, that might be my weekly area of support going forward. Now, what about the resistance areas above us? Okay, do we see anything here? Well, I see a big red candle on this day, April 22, open, close. Half of it is right around here, and then I can see there's resistance, and maybe resistance going forward. So now if I'm drawing more of my box right here, right there, where it was to that wick, right there, and I make it red. Why do I make it red? Because the red candle closed below. There's red, about 50%. Okay, open, close, half of it is right here. But I'm also using that area of structure where it went down, that wick came out and created that bullish ignited candle right there. So now I draw the same zone, bring it to the left, and you see how we're trading right into this red box as I'm speaking. Okay, so I'm going to continue with that red box and see maybe if they push the daily candle to come back down, maybe we're breaking out of here, and then where could be my next daily level we could drive up to. So now some key levels on the daily, maybe point of interest. I'm going to draw a yellow line up there. Why right there at 23.80? 23.79, okay, off by 50 cents right there, and I'm going to make that yellow. Okay, why? Because we could maybe drive up here, break out from here, and drive and fill that imbalance. It's just a big red candle that dropped on last Thursday. Okay, we could maybe come all the way back up green and fill up to there to 23.80, and then you see how it's a body over here. It was kind of a body, and then where's our resistance? Our resistance might be just above it. You see that wick right there? That might be your red box across. If you really want to get more specific, that might be. Do you guys understand what I just did there? Okay. Let me know now, because we use Tokyo sessions as more for education. Okay. If this, so you know what you're doing when it comes to New York. Do you guys see why Ron kind of put that red box to that wick right there? I could have gone to 50% of that candle right there. I could have done that. I could have exactly looked at the open, close. That's about 50% and had my red box. But I see when it came up on this day, it was green. They rejected it quickly. They took out the low and they dropped it. So there's my 50%. And then just if it does come up there, I just want to have a heads up that it could get rejected at that wick and stay below. You see this kind of structure? You got a body and a body right there. Maybe it does come up all the way up here and then gets rejected there, and then they push it back down. Okay, maybe it will break and close above there, and then I flip this red box green, might turn to demand, and then we're maybe coming up to that 50%, 2400 exactly. That's 50% of that candle, and then maybe we will continue to drive up to this red box and maybe the all-time high. Okay, but maybe gold is now making like a shoulder and then gonna physically come back down. This area could be the head that broke out up here. The all-time high could be the head. What happens if this is this move? Look, we've got our left shoulder came back down. Here's our neckline. We came back up, all-time high. That's our head. And then see how now we could be coming right back up to trade to that now right shoulder. Over there it's our left shoulder, maybe right shoulder, maybe gold. They push it back down, and then we're coming back down. There's what it typically looks like, a head and shoulder pattern. Left shoulder, your head, maybe you got your right shoulder developing, maybe they drop it down, and then we break here, and then gold has a long way to maybe retrace all the way right back down to this level. Okay, that's maybe more of a weekly analysis. We got to take it day by day with these individual candles to see what happens. We still have a lot of time, 18 hours left on this daily candle, lots of time. Okay, so this is my kind of zones on the daily. Okay, now what I want to do is also maybe give myself this volume on Monday where gold opened and closed. 50% of that big bullish candle is right there, half of it. So I'm going to draw a yellow line right here at the halfway point. Okay, give or take, open, close, halfway. Because if gold maybe gets rejected in this red box and we start coming down red, 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 maybe it will stop right there around 2340, and then maybe it might continue to make its way again to this red box, maybe break, close, and then have that momentum to come up to here. Okay, so I just want to give myself a little bit of a guideline that maybe this may turn into a point of interest at some point, maybe later today, maybe tomorrow, maybe Wednesday, Thursday of this week. That might be a point of interest. So that's why I have a yellow line there, just in case it gets down there. Okay, so let's take a look at now. Let's move to our 4 hours and maybe look for maybe a possible setup. 4-hour candles. Okay, normally you guys always see I go to the 5 minutes for scalping, but these are 4-hour candles. Okay, so you guys see how I have my upper zone, a zone here, a zone here. These are our 4-hour candles coming up. This one's going to close in 2 hours and 50 minutes. It's trying to penetrate through here. It might get rejected. I might sell below here. This could be developing like maybe a double top where it came up, back down. There's the 4-hour neckline coming back up. If they start to reject this move, if 4-hour candle maybe closes below there, small retest right there, we could come down to that daily point of interest and break and then shoot down there. It might be a 4-hour sell-off, and we might look for a possible 4-hour sell. If our 4-hour candles close above the red box, then we flip that red box green, might turn into a demand in the depth of market, and gold might pick up those orders and continue to maybe take out those wicks right there at 2370 and maybe drive up to this area. Okay. Have you guys ever added like just a quick Fibonacci just to see maybe where your critical zones are? So if I see, if I'm just following this trend, this high, okay, that's what created the all-time high right here, Monday at 1 p.m. on May 20th. And then I just put my Fibonacci down to that previous low. I'm following this leg to see maybe where the 50% or the 618 is. So if I just grab my Fib tool right here, I'm placing it at the top of that wick, dragging it down right there to that low wick, and then you see kind of how it puts my 618 right there, this area to concentrate on. See the 618 at 2,373, so it's kind of right below my daily supply box. So if these 4-hour candles come, you see how they can possibly break those wicks, create a new high, but then that's that 618 of this entire swing high to swing low. That could be the 618. Maybe there's a little bit push, and then you see it might come up to my daily supply, and then that's where maybe they might short it down. It might also get shorted down maybe somewhere near the 618 zone. So maybe you kind of want to keep some reference, or at this 2373, 2375 area. Okay, it might be an important area on this physical pullback that's happening, this counter buy. The overall market is bearish on gold. It's coming right back up, but that might be where we allow it to come up to, and then we start to look for maybe some short positions there. Okay, so that was using the Fibonacci of just figuring out where that 618 golden area is. Okay, so all I did was, do you guys want me to repeat that? This was the all-time high, 2,450. And I took my Fibonacci so I can measure this leg, this bearish leg that's coming all the way down like this. And now I'm trying to catch this pullback. This pullback, where could be the maximum it goes? Remember what I said, 20, like right there. Break those wicks. That's where the golden zone is according to the Fibonacci. Or not the golden zone, the 618, and then that's where maybe some selling pressure might come in and push it down. However, if it does have that impulse, I have my bigger area of supply that I looked at on the daily. That might be where I'm looking to short. Okay, so do you guys understand how I did that? How I got that zone, or the 618? I just took my Fibonacci tool, put it at the high, all-time high. I dragged it down to that low wick right there on Thursday, May 23 at 2100, and then you see how it just automatically, I know I do have the other numbers here, 23678, but I kind of have them blacked out because I just want you guys to focus on the 618. This is kind of the most critical area on a Fibonacci. Okay, this is a mathematical sequence that numbers don't lie. Mathematics does not lie. Okay, do you guys know how a Fibonacci sequence works? Do you guys know how these numbers are derived? These 236, 618. Do you guys know how these numbers, where they come from? I'll give you a little quick, really quick review. Okay, so simple math. 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8. 8 plus 5 is 13. 13 plus 8 is 21. 21 plus 13 is 34. I can go on and on and on and on, and then I might need to use a calculator as the numbers get bigger and bigger. So those are numbers that are permutations that will keep adding up no matter what numbers I keep adding. But if I divide them backwards, so if I divided that, what numbers did I say? I said 21 divided by 13. Then I'm going to start to get the 236, 786, the 618, and those are those mathematical permutations, and those are allowing us to see where logically, mathematically, the market may retrace at those mathematical areas. Okay, and they're not 100% guaranteed. A Fibonacci is just a tool you use in your tool belt to complement your trading. So you see now how it complements my trading. I did my higher time frame, my daily areas of supply, and then when I add the 4-hour Fibonacci, kind of almost complements where I'm looking to short the market right there at that right shoulder. That maybe it could come up to that 618, and that's where the market retraces back down. However, if the 4-hour candles do close above that 618, remember it was 2375, 73 right here. If it closes above, it might use that 618 as an area of support and continue to break through here, and we got that bullish move. Okay, so we use those as reference when the volume gets there, and then we make an informed decision. Okay, so if I'm looking at this path, what I'm looking for is maybe if I'll have maybe a pending signal up here at 2380. If gold comes up to, or at 2373, I can put it at that golden zone just to give me a signal. If it does come up there, that maybe I would be looking at maybe to see, are these 4-hour candles, are they getting overbought? Are we reaching this daily supply area? Is there a lot of heat in the is there a lot of liquidity in the market up there that could possibly short that? I could be maybe looking for a short position up there. I could be also looking to maybe short gold. Let's say it doesn't even get up to this level. What happens here? It got rejected there, came down. So if I just look at my 4-hour now, let me figure out where my 4-hour high and low are. on the 4 hour. So we opened right here, we came down bearish right there. That's our 4 hour low, 2349, 2350. That's a nice psychological number. I place a purple low, that's my 4 hour low, and then bringing it right back up to my 4 hour high of this candle. That's my purple high, 2356. So we might see how it's consolidating. We got a green bar, red bar, small green bar. We got a range coming down to the low, to the high volume. So we're consolidating. Like if you want to trap this 4 hour volume tonight, this is what I do. I trap it in here. Right now, is it creating a bullish flag that could potentially continue to break out of here bullish? Yeah, it could, but it could also maybe retrace from down here, come down to the yellow line. So the three paths are, we're going to continue to consolidate inside this box for the next little bit until maybe we get to London or New York, and then things will start to open up. Coming into maybe Colmex or New York, maybe if gold is breaking above there, maybe it retests this, then we might be coming up to fill those two wicks right there, hit our 618 zone that we just did, that 2373, and maybe, who knows, maybe it comes all the way up to 2380 and trades into our supply box up there. It could also maybe come down, close red below there, come up, retest, get rejected, then we're coming down to 2342, test that daily point of interest. If it breaks, we could be trading right down into this structure down in here, and there's 4 hour support right there at 2333. So it's hard to say right now where this could move because it's developing, it's trading sideways right now, but we're at a good point, guys, where maybe things will maybe tomorrow start to look maybe a little bit better as to what we're going to do. But if you look at the overall, there's a lot of supply coming down. These are 4 hour candles. A lot of supply coming down on the daily, on the weekly. This could be a small minor pullback. You know, sometimes when you're trading 5-minute candles and you kind of get a quick little counter scalp, like the original move is bearish, and then you get a quick little scalp pullback. That's what these 4 hour candles could be doing. They could just be doing a small pullback, and then the suppliers are going to absorb and continue to drop gold down. Okay. Does that analysis help you guys? So what I could be doing is, see now how maybe I want to fix this red box. See this red box? Maybe I want to bring it down to that 4 hour high wick. So I'm going to bring it down right there to that 4 hour high wick. And then if 4 hour candle does what I just said, maybe if it closes above, I'm going to have a signal at 2358, 2357. If it closes above there and kind of retests and allows me to flip the red to green, I might be going into a gold buy, and I may take it up to fill those wicks. Remember, 2373 we said was exactly the 618, but maybe it will break with that momentum and come up to the top of that yellow line, 2380, trade into that red box. Okay, how much? That's basically almost like a 1-to-1 risk to reward if it comes up there. Do I want to risk this much? Yeah, maybe on a 4 hour swing to hold, but if it closes above there, for example, if I get this move closing above, retest this, and it's starting to move in that bullish direction, maybe with this stop loss, I put it below my critical daily level right there. So now I'm getting maybe a 1-to-5 on my money, a 1-to-1.5, sorry. And then if it starts to start filling those wicks up there, then ultimately, same thing what I do when I'm trading 5 minutes is lower my risk, maybe take it down there below that 4 hour low. Ultimately, if you can get it to a break even and you're up 100, 200 pips to get up there, then fantastic. You've reduced your risk, same like a scalp. So that's, guys, this could be a possible setup to take a buy. Maybe what we can do is add a signal up there. If you have TradingView, you right click it, you can place a signal like right here, add an alert. I will. So I created it. So I'm creating it at that 4 hour high. If it does come up there, it will give me an alert, and I can watch maybe on the hourly to see volume close above, maybe take an entry on the hour. And then I'm not looking to scalp this position. I'm looking to hold this for multiple days. Maybe go into Wednesday, go into Tuesday, Wednesday, Thursday, and maybe gold is coming back up to here, retracing back up. But I still have to be cautious at each one of these red levels because it could make a lower high. Like it could physically come right up there. Then I got to manage my position. What do I want to do there? Do I want to go to a break even? Do I want to start to scale out a little bit of profit? Do I want to close the entire trade? Things like my plan needs to be made up when I'm taking that trade, okay? Because you still have a lot of supply. It could come right up there and sellers could absorb that move and then they drop it right back down. Okay, you've seen that a lot of times on trading 5 minutes. So you got to have a plan. Okay, that's for buy side. What about sell side? Okay, so I could also watch below here, the purple line 2350. Maybe gold starts to get rejected at this red box. They thin out these buyers and then it's ready to push down its next leg down. Maybe this is it. Maybe that's the supply. It's not even going to come up to here. So then if I start to look for maybe a possible sell opportunity, I'm going to wait for a 4-hour candle to close below here and maybe start to make its way down to each level. Close below there, retest this. First level is that daily point of interest, and if it breaks, possibly come down, take out those 4-hour lows right into our green box. If I'm in a short position, I would love supply to take out and drop even further, but I always have to respect this green box because that's where it could bounce. Okay, so that's a possible sell setup on gold on the 4-hour. Again, I got to monitor this going into London and New York. So I'm going to place a sell signal, right click, add the alert there. So now I've got 2 clocks, one up here for the bullish move and one below here for maybe the bearish move. And that might be a possible swing position this week. That's both biases, okay? If we want to go with one bias, then we really have to figure out what's going on in this flag pattern. It's consolidating right now. And there could be also fake outs. Like be aware of fake outs where they could fake out the high and then sell it down, where a 4-hour candle could possibly break impulsively and then it closes back down there and then it looks like it's going to be a short because they came up there, they swept the liquidity, they took out the highs, it was an impulse break, but then it physically closed below there, retest this and it dropped. Then we go into our short right over here. Same opposite could happen. Maybe they take out the low, they take out all of the bids, they pick up the liquidity, shorts cover their position down here, it comes back up, closes, and then all of a sudden it's breaking out there. So you got to follow each path, just like we're doing when we're scalping the markets on the 5 minutes. But this is the 4-hour. Okay, guys? So I will be watching this on the 4-hour this week. What are your guys' thoughts on gold on the 4-hour for a possible swing? Are you guys bullish on the swing to the upside, or are you guys bearish to maybe pull back down into here? What are 4-hour higher time frame swing position, not scalping right now? What do you guys think for the 4-hour move, considering looking at this overall pattern? Okay, remember what I said here. This looks like maybe a head and shoulder pattern. Like this area is like kind of the left shoulder. That's that big all-time high head that broke out, coming back down. So maybe here's a shoulder, but if it comes up there, that might be that finishing off that right shoulder where maybe they push it down. Okay, sells, D-Shark. Okay, in order to get sells down here, we got to start to exhaust a lot of this buying liquidity in this 4-hour candle. Bullish, Winston. So if you're bullish, let's see some 4-hour, maybe make a new high and physically close above, let's say 2356, 55 area. Maybe build off of this, Winston, and then maybe we could be heading towards this. But first thing is we always have to test here. Okay, so like I place a lot of lines on my chart, guys. This area needs to be tested. If we're coming up bullish, we got to fill these two wicks, 1 and 2. Could come up to there and maybe get rejected and then push down right there at 2370. I can see it did it right there and it did it right there. But with more momentum, more volume, we could possibly break right through there and then get up to that red box. But remember that 2373 is the 618 line. Okay, so just be cautious when you are trading. Again, there's going to be also a bigger stop loss when you're trading higher time frame for a possible swing position. So this is where you got to lower your lot size, lower your leverage, lower your risk. Okay, if I'm risking, let's say, okay, for this trade, for bullish. So if I'm looking to take the buy there, and maybe my stop loss is below that yellow line, I'm just going to do the mathematics with you guys with this ruler. So let's say, for example, I'm buying up here at 23.58, and my stop is down there. I'm risking 150, 160 pips. Okay, so obviously I got to do a smaller lot size. I don't risk 150 when I'm scalping the markets. I might risk 20 or 30 pips when I scalp the markets. But this is to hold for maybe a couple days or a week. But my reward, if it can fill up those wicks, okay, it's not the great, about 120, but I'm looking for that 1-to-1, maybe 150, and then if it can get up there, I'm looking for maybe 250 pips. So I could be physically risking 150 to make 250 or more. As it starts to go up, then my job is to manage my trade. It's to reduce my risk by taking my stop loss eventually to get it to break even, and then we're trading with no emotions in the market, and you're in profit, and you can trade a lot better, and market trading is easier when we're in profit and we have no capital at risk and we're at break even. Okay, so there's two sides to this. It's tough to say bullish right now, and it's tough to say bearish right now, because we've finished this bearish leg. We're getting this little counter bounce, but we're trading right in this level of supply, and it's a flag right now. And we've got a 4-hour candle that might have some indecision, where it opened up, it came down red, came back up green, pushing it right back down. This might finish as a spin top candle, but it's still early. It's 2.5 hours to go. So we could be just trading in here, and then when London and New York happen and open up, this is where we'll start to see the moves on gold. Okay. For you guys in Zoom, I'll give you guys this chart. We got to continue moving because it's already 10:30. We got 2 more charts to do. We're going to do NASDAQ, and we're going to do US30 on the 4 hours. So this is more of a swing position, guys. Okay. Are we clear on what to expect or what to look for? Okay. So that's just my analysis on gold on the higher time frame, 4 hours. Okay, and if you're looking for entries, okay, so this is another thing. If you're waiting for the 4-hour candle to close, then you're telling yourself you're waiting for the 4-hour candle to close. But you can also scale down to the 1 hour and look for entries on the 1 hour. See the 1 hour candles now, how they're trading? These are 60-minute candles. So they came up there, they got rejected, came back down, coming up. If I see an hourly candle maybe close above here, I get my alert, and maybe I watch that hourly volume, and it comes down in here, I make my green box, and then the hourly candle gets rejected and starting to move. I can take my trade on the hourly, but I'm playing the 4-hour volume. I'm looking for the bigger move. My stop loss will still be at this area, but you don't have to physically wait for the 4-hour candle unless you want to. Some traders want to get in a little earlier. 4-hour and 1 hour, that's kind of where you want to complement it. You kind of don't maybe want to get in on the 5 minutes and then hold for a 4-hour swing. Focus on the higher time frames. Hourly is kind of the best one that complements the 4-hour. Okay. But remember the mindset. If you get in on the hourly, you're still trading the 4-hour zone. Okay, so that's why this big blue zone looks different on the 1 hour. So you can see it's getting rejected right now. We have 30 minutes to go on this hourly candle. See how it came up here at 2100, came up again, they rejected it. Now it's a bearish candle coming down. It might come down to 50% of the hourly candle, it might go back up, it might come down bearish engulfing. We might be making our way down here. Maybe looks like maybe it's forming a double top. One top this zone, come down, there's our neckline coming back up. Now it might be coming back down. If a red hourly candle comes down and closes red below here, look for that quick little pullback. That might be option to sell. Take it down, break that daily point of interest, and then maybe follow that 4-hour volume, that sell volume. Maybe it might come down into here. Okay, so see how we're still consolidating? It's still in this box. It's still trading sideways. It may be a bullish flag. We may continue to break to the upside, but it's still early to determine. Okay. So let's continue moving forward. We're going to do NASDAQ. Again, we're going to keep tonight on the high time frames, daily and 4-hour. We're going to look for the bigger moves. Okay, so let's do NASDAQ. NASDAQ. Okay, this is how it looks on the 4-hour. Let's start off on the daily. So NASDAQ. Now, our brain needs to switch. When we're trading NASDAQ, we're not looking at gold and we're not looking at Dow Jones. This is NASDAQ. You need to know right now, if you're going to trade NASDAQ, don't just trade NASDAQ because your best friend trades it, or know what you're trading. What is NASDAQ? What does it consist of? What securities? What type of volatility does it have? How does it move? When does it move? These are all things you should know right away. When I come to NASDAQ, I know that this is tech related. About 60% of it is heavily weighted in tech. Who are our big tech securities that trade in NASDAQ? You want to know that it's your Microsoft, your Googles, your Nvidia, all of your tech names. Okay, so these are the driving force of NASDAQ. So if you follow tech, then this is a great security or index for you to follow. If this interests you. Okay, so I don't trade NASDAQ as much as I should. I do devote more of my trading time towards gold and US30 because just personally I'm interested in banks. I'm interested in big box retail stores, and NASDAQ does not consist of any banks or big box retail. It's kind of more so geared to, they do have some big box retail, but more geared towards the technology sector. And I don't follow tech as much as I should. So it's just personal preference. But if I want to, I can trade this thing, no problem. Again, I'm just following my fundamentals and my technicals and just looking at structure. So right now, we're at an all-time high area. Look to the left of the chart. Okay, this was our previous all-time high right here. When? This was November of 2021. We made a new all-time high right over here. This was March of 2024. We do have a new all-time high, 18,000. Let's see what it is here. Almost 19,000. We almost got there. 18,950. Okay, so zones now. Remember how we looked at some daily zones on gold? Let's do the same thing for NASDAQ. This is an area of structure where it got rejected, a lot of wicks to the upside, and then you can see the bearish move come down. So where did the market kind of sell? In this vicinity right here. I'm going to draw a red box. So you see how I didn't get that big wick right there, but I got the majority of that wick, got that wick, that wick, that wick, that one, that one, that one. So yes, I can make a really big green box like that. I can, but I kind of want to keep it consistent with those wicks, and that just looks like an impulse high, all-time high break at that time, and then they reversed it down. So stretching this zone across into the future, and the volume is above. So I can no longer use this as a red box. I just need to change it to green. This might be liquidity now waiting in the market. If NASDAQ ever does sell back down to here, this could be where a big buyer is waiting to buy that dip and take it right back up to all-time high or to a double top. If we ever do come back down here, again, it's a zone that I'm just looking at. There's another zone right here below us where it held support above 50% of that green candle right there on February 21st, and you can see its green zone right there turned into a red zone right there, red zone right there, and then you see this physical green candle closing above. 50% of the volume is right there in that same box. Stretch that zone across, and now I find my passive demand zone below this zone. So zone to zone trading, I find one zone, another zone. Again, here's one more zone. Why this area? Why this zone? Because look to the left, it was resistance right there, red, turned into support right there with that big green candle breaking. The same exact area, stretching it across, kind of that red candle traded right into it, and then that started that bullish leg going up. So that's our next zone, all the way down there at 17,000. Are we ever going to come back down here? I don't know, but if it ever does, I want to be prepared for it if it ever does. Now let's focus on all-time high. Okay, so we have our all-time high wick right there, and then I've got some structure being built. A body close right there on Monday, and Tuesday we're opening ignited red coming down on the daily. So I'm going to draw a red zone from the all-time high wick to those bodies right there, stretch it across into the future, but I'm going to make it red now. Why? Because I'm going to go with the latest daily candle and overall what's been happening the last couple days. It came up there, it got rejected hard, that was the new all-time high, found support, came back up Friday and Monday, and today, look at our candle today. It is a bearish ignited daily candle that came down and then went right back up, trading. We're right at that 50% of yesterday's bullish volume. Is our daily candle of NASDAQ going to continue to come down and break? And then will we trade into 50% of this green candle? So this is where now I'm starting to do my yellow line. Maybe if it continues to hold the uptrend right there. Open of this candle on Friday, the close, 50% of it is right there. If we do come back down red, today or tomorrow, we might come down red and physically trade into this area, maybe wick out of here and come back up. If it closes below here, maybe retest this, we might be moving bearish to take out, where's our next level? It's right here. Look how everything lines up. There's a body, a body, a body, and then look at the red wick right off that yellow line. Nice psychological number, 18,550. Okay, so now I'm just getting my daily zones. Okay, so you see yellow line here. That's a point of interest, 50% of that bullish candle. See if it will continue to hold this uptrend. If this can't hold, we might come down here where it held. A wick rejected right there. There was an ignited body that closed there. There was this spin top that came down red, 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 came back up and closed right at that red line. That red candle closed right there. So it is a point of interest, whether you like it or not. The market closed exactly right there on Thursday. It closed right there on Friday, and it opened bullish ignited right there on Monday. So whether you like it or not, I don't care. Like, I'm not asking you if you like it or not. The market is telling us it closed there, and it opened there, and it retested there. So to me, that speaks volumes. The market now, the candlesticks are showing me this is a point of interest on the daily. It may come back down there, and same buyers who bought here or opened this could be waiting, pending down there to buy at a discount again. Okay. Now, yes, we could possibly break to an new all-time high up here. Again, that's price discovery. So what is the next area we could break up to? 19,000. Okay, I'm just going to draw a yellow line up there. 19,000, that's my next whole number, 19,000. And then what's the bigger one? Okay, then take it, if you want to take it 100 pip increments at a time, 19,100, 200, 300, 400. The big one would be 19,500. That's where I'm now in the future kind of drawing my red box. If it ever does come up there, I'm kind of like anticipating that there's going to be some heat up there. Look at the heat right now on gold. You got heat up there, heat up there, heat up there. So, and then now naturally the move is coming retracing back below the VWAP again. We'll see if, remember that liquidity I was telling you about at that 2350? Are we going to trade back down into there? So you see, we came up to trade into this liquidity. They're in the market, they're holding it down. It's making a lower high, lower high, lower high, and new lower lows. And now gold is pushing back from that bullish move. It's retracing where kind of maybe where it began over here. Okay, so the markets are trading sideways in Tokyo right now. Nasdaq on these on the daily. Okay, so now what I do is I flip to 4 hours. I flip to the 4 hours. I got my daily zones, and these are our 4-hour candles. So I can see now exactly when we hit the all-time high, what time it was, Thursday at 5 a.m. That was pre-market US. And then when did we come down? Comex and Wall Street on Thursday, and it continued Thursday afternoon right into the close. And then we started our retracement to come right back up. Right here, Monday, 9 a.m. This was when the U.S. banks were closed, and then we came right back down red. Now we're consolidating. Okay, so these are our 4-hour candles. I won't be looking for buys unless we can close above the all-time high, and we can kind of flip the red box to green and then get that all-time high breakout. Unless I'm looking for just a trade from right here to come and fill up to there. If I'm looking for that, I measure, is it worthwhile taking that trade to fill that red box? It's only 70 pips. Okay, so it might not be worth it. What we got to look at are maybe the bigger zones. Where are they on the 4 hour? Okay, so right here, let's take a look. Where we impulsively broke up. Okay, look here. Open, close. 50% of that red candle is right there. We traded into it, they pushed it back down. We traded into it, they pushed it back down, but we're holding good support. Then it came really strong right through here, and it came right back down. So we're kind of trading right into 50% right in this area right here. I'm not going to put this zone on here. I just want to show you that. See this candle, the 4-hour candle, the big red candle, open, close. Half of it is right there. You can see the wick traded into it, pushed down. The wick traded into it, pushed down. This candle did close above it, but we came down red and it closed below. And now we're coming right back up. So this is where it might get really consolidated on NASDAQ until we get more into the London hours and more into New York. So just 4-hour area, what I'm looking for is, let's see here, maybe a break of this area. Okay, there was 3 equal low wicks right there holding support. We're still holding above 50% of this big bullish candle on Friday. I'm looking at Friday's volume, Wall Street Friday. I'm not looking really paying too much attention to today's volume because the US banks were closed. So I'm really looking at Friday's real volume right here. That was Friday, 9 a.m. Wall Street, 4-hour candle, close, retest, held, bullish move. Now we might be coming down. We could be consolidating in here. So what I'm looking for on NASDAQ is maybe, I'd like to see if the buyers can bring it back up into this red box, and maybe then it gets pushed down, maybe like down here. Then I look for maybe a possible sell to take out this area, or naturally if it is coming down on itself. So you see this big 4-hour red candle, open, close, half of it, and we're still below this area. Okay, if I look at this critical area, okay, I'll use a yellow line. Okay, why? Because yeah, this is daily. This is back here on Thursday. See the wick and the wick, 50%. What I was just talking about, the red candle open, close, 50% is right around there. Then the wick and the wick traded into there, and then now the red volume from the candle open to the close, 50% is right there. Okay, so I'm going to assume that there is still some selling pressure in the market right here that may continue to push NASDAQ down. Okay, there might be some lower high supply, and then as soon as it maybe breaks this low down in here, this is where I'm going to consolidate the 4 hours. Right in here. Okay, so this is where I don't want to trade this time, but I want to be prepared in case something happens. Okay, so again, we could trade inside here. There could be a bullish attempt to break out of here, close above, and then we fill just that zone, and then maybe we trade into there. Okay, that could be the move coming right back up to test the all-time high on NASDAQ. That could be there, could be a possibility, but also look at the 4-hour supply coming down. Okay, so we did come up. They did really flush it down. We came back up again, and now naturally it's making a lower high from the all-time high and might be trading in here. So if it breaks, this might be looking for maybe a bearish sell opportunity below here. Okay, and then maybe I want to take it down to that yellow line. If it breaks, there's my next physical 4-hour zone right there. Draw a yellow line here for a point of interest. Why here? Because the market is showing you exactly why here. It came down right into that yellow line and went right back up. Look at this big red 4-hour candle. Red, right into that yellow line and went right back up. Here it kind of broke impulsively below, came back, and look where it closed, right at that yellow line, and that started this bullish move. Again, there's the retest at that yellow line. If I get that 4-hour sell coming all the way down there, you better believe that I'm securing 80 or 90% of that trade down there and leave the rest running, because history is telling me that there's a lot of support down there. That could be where there is big liquidity. Maybe the selling comes all the way down there, and then there's a big buyer ready to absorb down there. Okay, so that could be a potential short opportunity. Again, if I do take that short on the 4-hour, like if I get a red candle close below, maybe I flip this green to red, I get a quick rejection. That's where I initiate my 4-hour sell. I'm looking for it to come down to fill this zone, this wick, that wick, and break, create a new low. Maybe it bounces off that, maybe it comes up, and then the supply continues to come down. Then I change this green box to red. Maybe it's a lower high. They push it down, and then we physically break down to there, and NASDAQ is selling off. Again, so I put an alert right here. How much of a stop loss do I want to use? Where do I want my stop loss? So if I take the sell right there, I could go with a really, really tight 4-hour stop loss, but I'm not giving it too much room to breathe. I could easily come up green, tap me out, and then they reject it down again. So I kind of want to at least be above this previous high, maybe 50% in the red box right there. So I'm risking 100 pips. I'm risking 100 to potentially make 150 or 200 when I measure the move. So coming down to the green box, that's about 50 pips. I want more than that. I want to take at least down to that yellow line. That's about 100. And then if it comes all the way down to there, it could be possibly 200 pips. Maybe if you have a little bit of break, 220, 225. So that could be my risk and my reward on the shorting on the 4-hour of NASDAQ. Okay. But however, bias could change by watching the 4-hour candles. What happens if we come back up bullish and we close up here, and then I flip this this red box green, and then it's holding this, and then all of a sudden it's ready to break out of here. Okay, then I don't even have an attempt to short the market. I got to continue to go with maybe this bullish volume. Maybe I take my buy kind of above there, and then where am I taking it to? I'm going to take it to the all-time high, and then maybe to that new all-time high to 19,000. And see what happens up there. And then my stop loss again. If I do take the trade right there, I could go with a really tight stop loss below that zone. I kind of want to maybe give it room to breathe, maybe below there. Maybe just right below that 4-hour big bullish candle right there. So again, how much am I risking if I go into that possible 4-hour buy? Just measure it. I'm risking approximately 90, maybe 100 pips. And then how much is my reward? If it comes to that, possibly over 100 plus. So it's a 1-to-1 the way how it shapes right now. But yes, things could break out and keep going. But right now, just by measuring the zones, that's all I've measured. I haven't seen when it gets up there, then I make my decision to maybe potentially hold longer. But you got to kind of allow the trade to develop. So what I'm going to do is I'm going to keep maybe the short position down here. It may be also a buy position above here to take it to maybe 19,000 for a new all-time high. And then while the market is deciding or consolidating, maybe this area, this 4-hour area is my area of consolidation, where I allow the market to trade in here so that I can see maybe the bigger picture of where the market is going to go for NASDAQ. What do you guys think? Do you guys think we're going to be 4 hours bullish, maybe trying for the new all-time high to 19,000? Or do you guys think that this supply is going to hold in the market, and we're going to break below here, and maybe we're going to retrace back down into here? If you look, could be forming like a double top on the 4-hour. This move came up, the all-time high top, came back down. We're coming back up again. We might trade in here. They might push it down and do something like that. So I'm going to be cautious on the buy up here, just because it's all-time high territory. You got to kind of be careful. So I'm going to keep the short signal as opposed to the buy. Okay. Okay, is that clear, guys? NASDAQ 4-hour, maybe a possible 4-hour short position down in here. If everything shapes up again, if you want to wait for the 4-hour candle to close below, you can. Again, what I did with gold, you can come to the 1-hour. See the 1-hour candles, how they're trading now? So the 1-hour candles are all the way up here. They're still bullish. But maybe the 1-hour candles do something like this. the top. There's our bottom coming back up, maybe a lower high, maybe a little bit more. Maybe they do push it down, close below, and then that could be the short position right there. And maybe we come all the way down. Maybe tomorrow we recap these, and maybe one of these trades plays out. Maybe some of us take the trade. Maybe we'll get some pips. But just put an alert right here. Put an alert, and when it comes down, you'll get alerted, and then just either go to the hour or stick on your 4 hours. And when you do take the trade, yes, you could take the trade and it could just drop for 10, 20, 30, 40, 50 pips. It's exciting, but when you're looking to take a swing position, try and look for the bigger move to the best of your ability. If you go up 100 pips, go to a break even and try and allow the trade to play out. There's going to be obviously pullbacks, lower highs, because it needs to break through a lot of bullish structure. But if everything works out and this thing is coming down here, it could get us that bigger move. And you just watch it on whatever specific time frame you feel comfortable watching it on. Okay, so let me just provide this chart to you guys in the Zoom, and we're going to finish off one last chart, Dow Jones. It's my favorite index. Okay, so let's do the Dow. Let's take a look at Dow. We've got, okay, so look at gold on the 4 hour. So it came down, it could be coming right back up. You can focus on the 1 hour if you want on gold. It's still in this kind of consolidated bullish flag box, could break out. We got NASDAQ in the middle, and let's take a look at US30 now. Okay, so we're going to look at US30, our last one. Burns, does Bookmap help trading out? Yeah, it does. It does help. It does, because see the heat right here we can see on gold. Like, it's visually, you can see it. This is live liquidity in the futures. With a candlestick chart, we can't see this unless you have some sort of heat map. But this is not only allowing me to see the heat, but it's also showing me how many offers are at this level. So 2356.8, 2357.2, there's 67 offers and 14 offers. See the footprint? There's a large order up here. So that could be some supply in the market. It could be making a top. Right here it made a top. That could be the physical second top coming in the market. These buyers might be trading right into that level, and then we'll see what happens here. Will it get pulled? Will it make for a new higher high? Will it get rejected? Will it push back down? Below us down here, I can see that look at that support being formed down there at 23.48. There's a lot of heat down there. So yes, it does visually help. You see things. You can see orders being pulled out of the market that you normally can't see with a traditional candlestick. So it does help. It does complement your trading. Is it needed? Is it necessary? No. I know I used to trade without looking at a depth of market, just with traditional candlesticks, but it does help complement your charts. Maybe you see things a little bit clearly. Maybe you do have a bias. Maybe you're bullish, and then maybe you start to see the depth of market building below you, showing you all the bids in the market. You see the traders are asking to trade near the highs. That might give you a little hint that maybe to stay in your buys, that it will continue to break new highs and create some new lows below us. Okay, but with everything, just take your time, learn what it is before. I know a lot of traders just see bubbles and numbers, but when you really start to pay attention to the detail that it's giving us, then you might start to make some more informed decisions. Okay, so my overall analysis of any depth of market, whether it's Bookmap, whether it's Quant Tower, whether it's Ninja Trader, is a positive. You do have to, for some of these platforms, you do have to pay to have them, because you got to subscribe to this rhythmic data, but there is some that offer free depth of market level 2 analysis that you might be using. Okay, but yes, it does help with trading, or it helps with overall understanding of the entire depth of market. Okay, so let's take a look at Dow Jones. It might be very similar to NASDAQ. This is the Dow. Okay, big moves. Okay, are we like, obviously it is very bullish still. If we look at how it's moving, all-time high, pullback, all-time high, pullback, new all-time high, now pulling back, bearish. Okay, so overall, where are our key daily areas of support? like right there, like just looking for daily zones. That is one daily zone. Are we anywhere near this zone? Not currently. Will it ever come back down here? Possibly. Sorry, I'm not gonna make it red, I'm making it green. Do we see like a visual double top in the market? Yeah, I can see one, where previous all-time high was right here. If I just stretch this across, okay, so is it green? No, it's red because the volume is below it. Now I can see when they took out the all-time high, okay, right over here, all-time high, that was last Thursday, and pulled back. Again, we took it out right there. So our high is 40,080. We're not near the all-time high, so we still got a lot of work to do on the Dow to get back up there. But there's also we gotta acknowledge what the sellers are doing. They're pushing the market down, and they got a lot of volume behind. Okay, we're consolidating these last few days. These are daily candles. Look at Friday. Okay, so Friday was a really weak volume-based candle on Friday for Dow. Monday, yesterday, okay, US banks are closed. Look at this little small doji candle. They gapped it up right now. They pulled it down. So you see we're in this stuck in this little range right now on the Dow. Things will open up as we get more into London and more into New York. But just some key levels. Okay, this is a big block. This is a big zone. This big red box and this big green box. They're too far apart. I can start to see that we have other zones in the market right here. This used to be an area of support in the market. Okay, so I'll flip it green to show you real quick. Okay, green. See how there was no red volume close below there. It came down, yes, red, but the candle closed in the green box and continued push up. Came back down into here, bounced out of there, rejected, continued to make that all-time high. So if I stretch this zone across, you see now how the red candle closes below, it retests it and gets rejected, retests it, get rejected. So therefore it's got to be a red box. And then if I stay with the red theme right there, you see the double bottom? See it came down, back up. There's the neckline. It came back down, double bottomed, got all that bullish volume. The second leg is the stronger one. We physically closed with a green body above. So what we got to do is just flip red to green and now stretch it into the future. We may come down there maybe in the next few days. Okay, this one is more maybe active and this one is pending down here. I see one more zone above me. Okay, see all of these: rejection wick, rejection wick, rejection wick, rejection wick, rejection wick, and this rejection wick. It's all in this area right over here to my chart. Rejection, rejection, kind of rejection. 50% of that green candle right there held support on that body. Now I continue with this zone, and you see now how it turns into resistance. Okay, so make it red. Now I'm really kind of consolidating my daily zones. So you guys see what I did there? Now I got my daily zones. You can stretch them as far as you want into the future. Now this is where we're trading. We're trading in here. So what happens if our daily candle comes back up, closes above there, retests this? We could be coming up bullish right back up to that all-time high. If our daily candle maybe closes below here, retests this, we might be coming down to our green box and then trade into where? 50% of that big green daily candle, which is 50% in that zone. Right around here. We could get, this is where you could get a daily impulse candle breaking, because you see the thin volume you have on these candles. Like you might have a red candle that just breaks out those wicks and drops. So that's where you got to kind of focus on the 4 hour or the hourly to ride that daily momentum to drop down into here. Okay, so if I kind of want to condense the chart now I've got my daily levels. And then I'm going to go into the 4 hour. So I can see the daily kind of built a top up there, got rejected, came back up, kind of this whole area, one top. There's our second top pushing down. Are we going to trade in here the next few days? Are we going to trade into this zone up here, or are we going to come down all the way down into here? And see the nice physical patterns when you learn what these are. Double bottom, there's one bottom, there's our neckline, second bottom, there's the candle that closed above, and then there's your imbalance to the new all-time high. Now we're pulling back down. Where will it pull down to? Will it hold? That was the breakout neckline right there, the W. So that's why I have it green. If it comes back down in there, will the buyers be waiting to take it back up? If they do, yeah, there might be an initial bounce, but if the supply keeps coming down, they have created a lower high, they absorb those buyers, and then they continue pushing it down in here, and then we might physically come all the way back down there to test where the double bottom occurred, where all those buyers created the new all-time high with that big leg. We're still far away from this move. Now what I do is I go into the 4 hour. Now I kind of dissect the 4 hour. Look how the 4 hour candles are trading. They're kind of like dead. There's like no volume compared to all of the previous 4 hour candles. So the trend from here, from the all-time high, is from Monday, 10 a.m., is clearly bearish of last week. Okay, you can see it came down, support, came back up, lower high, came back down, support, new lower low, came back up, lower high. They flushed it, and then we came back up, and we're just trading inside here. Okay, so there's a lot of dead volume in the market right now due to the US banks being closed today. Now, when I just look at a 4 hour level, okay, just a 4 hour level, I'll continue to stay with the yellow line theme right there. Okay, 39,000 on the dot. Okay, we had a wick come down, go back up. 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 Bullish candle. So we're just consolidating. If you want to kind of trap this 4 hour level, you can absolutely trap it. You can trade in here if you like. But again, we're looking for the bigger moves. We're not just looking to just scalp. We're looking for the bigger moves. So what are the overall bigger moves? Again, where do we have another level in the market? If I can see it come up bullish, okay, if it closes above here, we retest this. We do have some momentum that we can come up to the upside, but look to the left of the chart as well. Over here we had resistance, turn to support, now resistance. Okay, so just one more level. I want to show you that how they're lowering supply. Okay, you see that big 4 hour. Look at the big volume based candles. Open, close, half of it is below there. That was structure right there. Turn to structure right there. Structure right there. Yes, the 4 hour candles can come all the way right back up there, 39,600 level, and then they push it right back down. And this big block is protecting the all-time high. We might not get all the way up there. Maybe it just breaks out to where? Right here. See how there was some physical. I'm going to draw a yellow line right here so you guys can see what I'm looking at. I'm looking at this area right over here. See how it was a wick, a wick, a wick, a body close, a body open. See that wick, and then we broke down. What happens if it just comes up right up to that yellow line, and then it's a lower high that they push it right back down? So you can see that the supply is coming down with those big 4 hour candles. We may come back up, but I'm going to go with this physical supply still in the market. I'm going to say that sellers are kind of still in control of this leg. This might be like a bearish flag that's just trading sideways, and the sellers might come in, close it below there, and then they might physically start to drop it back down into that green box. So again, if I'm looking to initiate a 4 hour sell on Dow Jones, what I'm looking for is it's tested here multiple times. 1, 2, 3, 4, 5, like 6 times it bottomed out there. So if I start to see lower high, like I follow these, I see the rejection wick. If I'm drawing as like just like looking at the bodies, I know it's a lot of lines, guys, but I'm just trying to show you what I'm looking at. You see here, we've got a body, a body, a body. We came up there, we got rejected at that line. They gapped it up. Look at how they gapped up the market. Okay, they gapped it up right to that yellow line. They're pushing it down. They're trying again to bring it back up here, but this area is a level of focus, 39,125. Those quarter increments, 125, 150, 175, 200, 225, 250, 275, 300. That's where that yellow line is. And I can see above me a big rejection wick, a rejection wick, a rejection wick. If I see a green body close above there, yes, then it might fill and come back up there. But I'm still going with this supply right there, heavy coming down, that supply coming down. The buyers did trade into there. They pushed it down, the sellers. It did come back again up there. They did push it down. So what happens if we're creating like a bearish flag? Maybe down in here. So maybe we might come back down. Again, maybe bounce off this area, then we got a lower high, then it actually physically impulsively breaks below here, close below, maybe I get my retest, and then I short the market. Okay, so if I'm looking for physical shorts, I'm looking to short Dow below this yellow line, this structure, right below 39,000. Okay, nice whole number, 39,000, below there. Where am I looking for my reward? Again, I look at structure. Okay, I could be looking to take maybe some profit out here. Why? Because structure tells me that there was a wick, then a body and a body closed, and then the retest was the yellow line. It could just come, it could be a short right down to that yellow line, and it could bounce, but then hopefully it's a lower high and the supply keeps absorbing it and pushing it back down, where it can physically come maybe all the way down, fill down to that top of that green box. If that's the short position, again, I'm looking to take the short at 39,000. How much stop loss am I looking to risk? If I take the short down there, maybe my stop will be above this yellow line. Maybe my stop might be above that big rejection wick right there. And then I'm in this box. It all depends on how much I'm willing to risk. So again, I measure. If I take the short at 39,000, and then I got my stop loss right above that yellow line, above this previous high here, you can see I'm risking 125 pips. If I'm going all the way to the top of that wick and that box, I'm risking 225 pips. Okay, that might seem like, wow, Ron, that's a lot. Normally when you're scalping, you're only risking 20 pips. Again, this is not a scalp. I'm looking to maybe hold this all day Tuesday, Wednesday, Thursday, Friday, maybe over the weekend, and see if Dow Jones really breaks down. Okay, if I do take that. But my reward too, then I measure from 39,000. First level I look at is that yellow line. That's about 200 pips to the yellow line. If it goes to the full target, now you're looking at 400 plus pips. Okay, so I might be risking 150 to possibly make 300, 1 to 2 on my money, maybe a little more. Again, if I'm risking that many pips, I gotta do a smaller lot size. I might risk, let's say, a 0.1. Let's say Ron goes $1 per pip. If I risk 150, I might risk 150 US dollars at a 0.1, a micro lot, to potentially make maybe 300 US dollars. Okay, if I get stopped out and I lose $150, that's not enough to destroy Ron or destroy my account or lose all of my earnings for the previous week and things like that. That's well within my risk. That might be a lot for you. Then you maybe have to reduce that size down to below a micro. So you got to go smaller. So that's just gauge it, do the measurements, measure the move, know how much you're willing to risk mentally before you go into the trade. Is that acceptable for you? Then let the trade play out. Then this is a trade where if you get in with confirmation, either on the 4-hour or the hourly, you don't need to babysit this trade. You don't need to sit and literally watch it every 5 minutes. If I'm in a swing position and I've made up my mind, I'm looking to short it here, my hard stop is in the market right here, I know how much I'm willing to lose, 150 bucks on this trade, I can go to sleep at night, I can let this trade play out. I can have alerts when it reaches levels for maybe to tell me maybe start to take some profit or maybe reduce my risk. So if it starts coming down here into profit, then my next job is to reduce my risk and ultimately get my risk down to break even. Who knows? You might have a 200 pip runner and you get it down to break even, and then this trade might continue to break down. Some of our traders in our group can swing and get 500 to 1,000 pips on one trade if they hold the entire move and let it play out. So you've got to have the right mindset when you're thinking of swinging as opposed to scalping the markets. When I scalp the markets, I'm looking to be in a trade for just a couple minutes. For maybe, depends if I'm trading the 1 minutes, maybe a couple minutes. If I'm on the 5 minutes, I might be in a trade for 15 minutes, 30 minutes. When I'm in a 4-hour swing, this might be, I'm holding this thing for a couple days to develop, okay? So that's maybe sell side to continue pushing down with a lot of this supply. Again, if we draw our Fibonacci, if we take from our all-time high of Dow and bring it down to this low, let's see where our 618 is, maybe our retracement. So let's grab our Fib tool. That all-time high, 40,080. I drag it. Sorry, did I click on this? Okay, and then I drag it down to this most recent low, and you see where my 618 is? Look, the 618 lines up exactly right on top of my yellow line. Okay, so it's confirming this structure to the left. See how I placed that yellow line to illustrate to you? There was a wick there, a wick there, a wick there, a body close there, a body close there, this wick there, and the drop. Look how the 618 lines exactly right on top of our yellow line. Exactly to the pipette, like 39,413 on the dot. Okay, so if you look for a buy on Dow, maybe we close above there, we retest this, and we start breaking out to that 618. Okay, if you go into a buy above here, like if you get a 4-hour candle starting to close above there and retest, that might be your buy opportunity to take it to the upside. If you're looking to take that, again, from this yellow line right here, take it up to there. You're looking about, it's almost 300 pips up there, okay? If it gets up there. If it continues to break out, maybe almost close to 400, 500 is that top of that big red box. But if you get that, if you go for the buy, like let's say we get 4-hour volume close above here, and then we're getting this big move down and there is no sell set up, then we maybe have to flip our bias, and maybe we turn into buyers with confirming volume. If I do take that buy, okay, like kind of above there, again, how much am I willing to risk? What is my reward? Maybe my reward, I want to test out that 618, that daily point of interest up there. How much am I willing to risk? So if I take that buy, maybe my stop loss will be below this yellow structure. Maybe it might be 50%, depending on how much I'm willing to risk for my reward. I measure everything, so I know before I even take the trade. If I do take that, if I'm risking just to the yellow line, I'm risking 130 pips. If I go down to there, I'm risking 200. What is my reward? We just said that. The reward is to take it through this red zone, maybe get it up to that 618, and our reward is 300 pips. Maybe there's an impulse break up to that previous high wick, and now you're up 350, maybe 400 pips. Then if that happens, you take your stop loss, and you want to try and reduce your risk to get it to ultimately a break even. And you might be up 200, 300, 400 pips. You get your break even set, and life is good. So Dow possibly has two areas it can move to. Okay, so I'm going to keep Dow open with possible buy as long as we get some volume closing above here and we develop this depth of market, or the possible sell, okay, down here. Again, I place an alert. See the yellow line? Right click on 39,000 and I can place my alert. Sorry, is it not placing it on there? Okay, add an alert up here for the buy. Okay, so I have alerts on my charts now. I have alerts for gold. I have alerts for NASDAQ. I have alerts for US30, all on the 4-hour time frame. So now I'm looking for maybe the bigger moves. And we'll review these tomorrow. And then tomorrow, guys, we're going to get back into lower time frames. I just wanted to do today, take it easy, because we had the US banks closed today. We went over Forex Factory together. We went over earnings. We know which days have the big earnings this week. We went over some top-down analysis today. We've got our charts all set up here. Let me just provide this one last one to you guys in Zoom. How was today's session, guys? It's more of a laid-back session. Hope you guys learned something new today in the markets. Tomorrow, okay, we're going to get regular traded volume now. Everything is open. So please, guys, when you are trading, trade with proper risk management. This week we have an awesome webinar coming for you guys in Zoom on Wednesday at 6 p.m. I got a new series coming out. I've created the SST Super Systems Theory of Trading. I want to give you guys everything. Like, it's a whole theory. It's a whole theory of trading. And I want to talk about every aspect of trading. Okay. Everything. This is a whole super systems theory, okay, that we created here at SST, and we're going to start to release these live with you guys on weekly webinars. I really want you guys to be focused this year. I really want you guys to maybe study June, July, and August and get ready for September when the Labor Day market comes, and then we can move into our seasonal Santa Claus rally in the stock markets and things pick up. But I think the summertime, guys, you should be learning, because some of you guys take the weekend, take the summers off. Some of you guys are vacationing. There's not the craziest volume in June, July, and August in the stock markets. It's a good time to learn and be prepared for the best trading times come September, October, November. So I want everyone to be fully educated as to what is happening. Some of you guys are doing really, really well. You're taking your education real serious. You guys are putting a lot of your time. You guys are sacrificing a lot of your family time into the markets, and it's part of the job, guys. You know, it needs to be done. In order to get a good return out of these markets, you got to invest. You got to invest some time into the markets. You know, the trade is not going to set up by itself. It takes time, like what we did today, going over the higher time frames, analyzing the markets, talking about hypothetical situations. Yes, it could possibly go bullish, it could possibly go bearish. We take it candle by candle depending on the time frame. In swing positions, we're looking at 4-hour candles, but this is the work it takes, guys. It's not easy, you know. A lot of traders don't show the preparation it takes in order to get their pips. All they show is after the fact. They show how much I made or look at my pips today, but they don't go back and show you the preparation it takes to get those trades, the preparation it takes to hit those pips. It's a lot of hard work, guys. I do a lot of my analysis on the weekends. You know, the last thing I want to do on the weekends is looking at the charts, but that's what it takes. I've been doing it all my life. You know, I kind of don't have weekends, but I don't spend the entire Friday night, Saturday, and Sunday. I dedicate 2 hours, like with you. This was a 2-hour call. I've kind of prepared myself for Forex Factory, for the earnings, kind of prepared myself for NASDAQ, Dow Jones, and gold, 3 securities that I could be watching. We could add more securities on there if we want, but you know, 3 is more than enough. These things are going to move in a certain direction with the news, but we will be ready for these things. Gold, we already did gold. If you're just joining late, guys, this is our 4-hour analysis on US30 we just did. This is our 4-hour analysis on NASDAQ, what we just did. And this is our 4-hour analysis on gold. And gold is still in this range, still consolidating. This 4-hour candle now is going to close in 1 hour and 40 minutes. So it will be closing at 1 a.m. Eastern. So it's still in this range. You know, let's keep an eye on below 23.50, and let's keep an eye above 23.57, I would say. Inside this box, if you do want to trade in there, you certainly can, but for 4-hour time frames, let's wait for something to happen above or below. And remember, it's not always going to be a candle close above with a proper retest and a bullish move. Watch for fake outs. 4-hour candles fake out the markets too. You might see an impulse 4-hour candle, get a wick, and then come back down and close below. The 4-hour candle might be giving you a clue as to what's happening. So just like 5-minute candles do. So pick up on clues. You know, try and use proper risk management. Try and be as patient and disciplined as you can when you're trading. Try and avoid impulse trades as much as you can. But there is also a time and place when to take an impulse candle. The story has to lead up to it. Follow the liquidity grabs. Follow stop hunts. Follow what's going on in the market. And make the best high probable decisions with proper risk management. Don't risk a lot, guys. Don't be risking 10% of your account on a trade. See now how the candle, the 4-hour candle, as I'm speaking, kind of lost its 4-hour volume. It might be coming down bearish. So you see the selling pressure right now. Look at all the liquidity above us. Where would you say there's more liquidity? Above or below us? I can see that heat right there. So you see how it made a lower high? You can see how the market does these things. See right there, that's where the buyers got stopped up there. And then you see that big block of heat that came in the market. We did not trade into this. Look at the buyers brought it right back up there, but it made a lower high right there. See, it came in there, and that's it. The supply came down and protected this block, lower high. Now the market is traded. It just broke a new lower low and now dropping down. So remember that heat that we were talking about at the beginning of the call, that 2350, kind of disappeared. Let's see if it will reappear, or maybe it will appear lower, because right now the selling pressure is coming down. These bids might get pulled out of the market and might continue to trade down in here. But that 4-hour candle is slowly walking down. It's going to close in 90 minutes. Keep an eye on it. If you want to trade the hourly, look at your hourly. Go to 1H, 60 minutes. Look at the big, now what's coming down, okay? So this is kind of that M top, double top I was telling you. I know it's ugly. It looks like this. One top, there's our neckline, came back up, lower high, pushing down with that red volume. If we get an hourly candle, maybe close below there, look for it to maybe initially come up green, get rejected, and then that might start our short position. Okay, so keep an eye on this, guys. Let the trade come to you. Be patient and disciplined. Don't force any trades. If you know you're forcing a trade, it's probably not meant to be. You got to maybe continue to wait it out. And then if you're speculating, use a little feeler trade. If you're going in the market and you're not 100% sure, but you want to get your feet wet, go in with a small trade. Something insignificant, something that's not going to really damage your profit loss for the day. Take a little feeler trade. For me, feeler trades are little micro sizes, 10 cents. If I go down 30 pips, I lose $3. It's not going to make or break me for the day. It's just, okay, I'm getting more information from the market, how it's trading, and that might allow me to get into my bigger trade when the time comes. Okay, but everybody, I appreciate all of you guys. Tony, inshallah, you're manifesting your first real payout. It'll come. You know, just take your time with it. Don't rush the process, Tony. But when you get that first payout, man, I'm going to be so excited for you, because I know how hard you've been working here from day one. So let's just continue to stay focused, guys. Let's try and get our payouts from these prop firms, but trade smart, guys, to the best of your ability. Try, guys. The biggest mistake we have here at SST with a lot of other traders is they're simply over leveraging. They're trading too much, too big. They panic when they get into a trade. Trading, you should not panic. If you've planned everything, you plan the trade, you planned how much you're willing to risk, you don't need to panic. Now you should be focused on the candlesticks. When you take a buy or sell, you've worked everything out. You've worked how much profit you can make from the trade, and you've also worked out how much you can lose. If you're okay with it, then stop looking at your platform to see whether you're in the money or you're green, or if you're red or blue, or you're in profit or you're in drawdown. Focus on what's happening on the charts, and then it will allow you to make better informed decisions. You can see exactly what's happening. See how that red candle came down? Now it's coming right back up. So there's too much indecision to be trading right now, unless you might be scalping the markets. But these are the 5-minute candles. Okay, these are how they're trading. Did you take a sell from the top? It did come down, but look, if you didn't do anything, it came right back up, kind of allowed you maybe to hit another sell opportunity. It came right back down. It might be coming right back up again. So the 5 minutes are kind of in a very, very tough range right now. I would ultimately stay out of the markets right now until maybe pre-London, and then getting into pre-New York hours. Okay, but thanks everyone. I appreciate all of you guys on YouTube. We didn't have a lot of people today, a lot of viewers, because I know it's late. It's 11:30 p.m. Eastern, but our Tokyo sessions, we do these for a lot of people around the world that do like this session. It's more education, more charting, more Q&As. You guys can start to ask more questions as we go along. Tomorrow we'll break it down. We'll go more into the lower time frames. Tomorrow we'll watch 5 minutes. We'll watch gold and either Nasdaq or Dow Jones or S&P tomorrow. Okay. I appreciate all of you guys. Thank you guys, everyone on Zoom. Thank you guys. I appreciate all of you guys. Have a good night. Join Shahab in London and Dave in New York tomorrow, and then I'll be back later on for Tokyo. Everyone on YouTube, I appreciate all of you guys as well. Thank you guys. Enjoy your late night. Get some rest too. That's part of being a trader, is resting, guys. You don't always want to be in here with raccoon eyes and not sleeping. Okay, get some good sleep. Your brain needs sleep. You focus better. You can react better in the markets. You make a lot of mental mistakes when you are tired, and that might affect you. So get a good night's sleep, guys. There's going to be a lot of better volume to trade in New York compared to with what we got right now. Okay. Awesome session, guys. Have a good night. Please hit the likes on YouTube when you do leave. Subscribe to our channel and join our free Telegram right here. It's pinned at the top of the YouTube. A lot of useful information is given out on here. All of our live sessions. We're streaming the SST kill shot at 2 a.m. Eastern, pre-London, if you guys want to watch it on YouTube. And everything we do here, guys, it's there for you. There's our weekly schedule of when we're trading on YouTube and all of our other Zoom sessions and all of our promos and giveaways. Okay? Have a good night, everyone. Thank you, guys. God bless. We'll see you guys tomorrow. Stay safe and have a good week trading.
Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you. At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit StockSniperTrading.com.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. It's yes, we caught it. Hey, guys, 200 pips, please secure.